Hello.
Hello.
Nice to meet you, James. We are the first
Yeah,
time.
nice to meet you. That's Igor, is it?
Igor, yes.
Igor.
Yeah.
I was listening on one of your streams earlier in the week, and you were talking about Igor or Igor. I just remembered some people say Igor, some say Igor.
Both are true, no problem.
Yeah. Well, how's your week been going so far?
It's a little bit boring week for trading and interesting based on fundamentals. So just I can describe like that. So how is your week?
Yeah, quite tricky. We had some good trades on, a bit of chopping around on metals and Bitcoin, of course. And who knows what's going to happen in the stock market? I don't know. Just looking at these charts, I mean, it's not looking great at the moment, but I still think we might have a rally in for the next number of weeks. So, but we've been okay. We're doing pretty well.
Excellent.
Yeah.
I hope that in all this conversation with other people, I'm trying to learn different concepts from different traders. And this is the first time that I can ask a lot of questions about gold, because the gold is a little bit tricky to trade. And I see that a lot of traders like gold. So I just want to see the biggest problem for me that I'm thinking right now about gold is highest highs. So we have the very often the new highs, and how to react on that, and how do you trade the gold? What is your opinion when you are on the highest price ever? So I just want to see what is your usual reaction, James?
Yeah. Well, that's a good question. I guess that's one question that a lot of people would like to know the answer to. I think when it gets to these extreme levels I mean, we've seen it a lot on different things. We've seen it on NASDAQ this year, on S&P, on Bitcoin, a couple of other instruments, gold. And once you get into sort of blue sky territory and you don't know what's above you, you can use a couple of different techniques. I don't think any of them are very valuable personally, but a lot of people try to use Fibonacci extensions. I like Fibonacci's a lot, so I use them every day. Not so much the extensions though. And I think all of that speculative stuff is pie in the sky and hope to die type of thing. So I think the only way you can really do it is by observing price action. And all of these markets can carry on going up much higher than one expects. And I think the problem that most traders have is when, the stochastic's overbought or the RSI's overbought or whatever it is that they're looking at, that the market should turn around, particularly when we're at very, very high levels. But often those oscillators indicate that we may be going higher, particularly when we get overbought, very overbought stochastic and RSI readings or MACD readings. That could just indicate that we've picked up momentum, because it's a momentum indicator. It's showing momentum to the upside is very, very high beyond normal levels. But isn't that what we want in a bull market? So,
Yes.
whilst everyone's trying to pick the top, momentum's building up to the upside, everyone's looking for the top. So I think that's a very bad strategy to try and pick tops or bottoms for that matter. And I just prefer to watch for price action. And when you're dealing with new all-time highs, you've got to start looking at weekly and monthly price action rather than hourly or daily, because the market gets more and more increasingly volatile as we get higher, as momentum increases, as we get parabolic, the swings become more violent. And so day trading is fine. I mean, you want that as a day trader if you're a scalper or a day trader. But if you're a swing trader, you've got to be looking at the longer term charts. So I'll be looking for reversal candles on particularly weekly charts, and then in daily and 4-hourly charts. And then you've just got to start looking for those price reversal signals and having a go. You might lose out on 2 or 3 of them if you're aggressively picking the top. If you're a little bit more chilled about it and slightly less aggressive, you may still get stopped out on a couple of occasions, but that's okay. Nothing wrong with paying your school fees. Nothing wrong with paying to get into the market sometimes, as long as you don't overpay for it. And that's what most traders will end up doing, is overpaying, adding to their positions, moving stop losses, not getting out, hoping for it to turn around, looking for divergence on the indicators, which may or may not occur, and it doesn't really matter anyway. And the market keeps on going up and they get trapped. And that's what causes these short squeezes.
Yes, I have one question about reversal. For example, if I'm swing trader on gold, for example, are there any correlation with volume there? So that we can see, for example, a low to high volume when we see some reversal pattern on gold or something like that. Do you have some experience related to volume and gold?
You know, Igor, I'm not much of a volume observer myself. And I've seen too many times that the market will do something on high volume or low volume, and everyone makes a decision based on the volume at that point. Yeah, I'm talking about basically the volume of each individual candles, the volume indicator at the bottom of the chart, not the sideways one or the volume profile. That's a different matter. But, you know, if you see a big candle with big volume, everyone sort of kind of gets excited. If you see a small candle with big volume, everyone doesn't really know what that means. If you see a big candle with small volume, everyone gets confused as well. And often when you do get a big candle with big volume, it doesn't even carry on in that direction. It's just a, you know, dark pool order or something weird happened, or there was an options expiry at the moment or on the day, whatever it might be, market makers getting involved. So volume is a bit deceptive. And a lot of volume is created by hedgers and market makers. So you never know who's doing what when you see those volume spikes. So sure, I mean, maybe it's something I should pay a bit more attention to, but I almost never have a volume indicator at the bottom of my chart. I sometimes put a volume profile on the side so I can determine the most highly traded regions on the chart, your price levels where there has been a lot of volume, not necessarily related to time, but to price. So that's the difference. When you put the volume indicator at the bottom, it's a time-based volume indicator. And on the side, the volume profile, you're looking for price levels where there is a lot of volume. And I think that's more valuable and important. And so when you are picking, so when you've got blue sky above you and there's no volume above you at all, it's never been there, you've got to look at the bottom of the chart, the volume at the bottom of the chart. And I just don't trust it enough to pay a lot of attention to it in my trading.
Yes, there is one very, very good session with Sam, and I traded a British pound dollar. I use a British pound dollar futures just because of the volume, and I personally I do not use volume a lot in my trading. I didn't use, but what's happened there? I use important price levels a lot, and many of that price levels are price levels that repeats itself from 1985 or something like that. In the last, for example, 9 years, from 2016 to 2025, after the Brexit, we have the same price levels for British pound dollar repeats itself every single month, every single week, and it's so good for traders. However, in that session with Sam, he just took volume profiles and find the price levels exactly the same as mine price levels that I just use based on statistics and based on some support resistance things. He really used the volume profile very, very well and used in trading. So I was a little bit curious about that, and I just last 2 weeks started to analyze volume profiles more. And I found a great stuff, and I hope that next week I will just show people some things that I figure out using a little bit my expert advisors and my systematic approach to trading. But I hope that there are a lot of things that we can use. And just to tell the traders that maybe watch right now this, it's very important to know that at CFDs we don't have real volumes that we can use like for stocks, for example, but we can always go to the futures market, find, for example, British pound dollar, but only in futures, see the real volumes and make some decisions based on that using the different markets. So this is the little trick that everyone can use in trading.
Yeah. I saw Sam's charts, which are it's a new type of candle available on TradingView, which shows the volume on this, volume profile at any particular moment on the chart. I don't know where those numbers come from, Igor. I'm not sure if they're based on that broker's volume or on their ETFs or CFDs, or if they're getting the data elsewhere. But it's definitely not the entire market that we're looking at.
Of course.
Yeah, it's some section of something that they're measuring. Again, I don't know what it is, so I can't trust it, of course. So, but it is interesting, and as you observed, he does manage to pick out the technical levels. But I think those are pretty evident anyway, from where the price reacts naturally, and the shapes of the candles and the levels at which it reacts. So I guess there are just different ways many ways to skin a cat, which is a horrible metaphor, isn't it? But
yes, but in the end, we will be on the same. So very often we use different indicators, but very often we have the same price levels and usually similar bias. So this is the good about trading, because you can get to the same conclusion using the different tools.
Yeah. Igor, what do you trade yourself mostly, or what are you going to be talking about today?
Okay, for today, I can start a little bit, maybe for myself and other people, recap of this week, and maybe a little bit to talk about everything. Let me start maybe from the fundamentals, because they move everything, and some little observation related to fundamentals. Right now on the screen, we will see the calendar for this week. I just wait couple moments to be seen. Yes, this is it. So this week was very important if we watch fundamentals. So first, on Monday, we had a core retail sales, a little bit bad for US dollar. Then we have a CPA for Canadian dollar, better than expected. Then, like I said, we have a lot of information there. However, the problem with all these fundamentals that I just with Paul discussed yesterday is that we sometimes need to see a couple weeks or months to see the real stuff from there. The biggest thing that just surprised me, was New Zealand dollar. So for all traders, New Zealand dollar, we got much better than expected GDP and very hawkish reports for New Zealand dollar. We were minus 1.1%. Now it's 0.7%. And believe it or not, after this news, we started to go down for New Zealand dollar. And it was a really push down, and something that I didn't for a while. Such a great push after such a good news. And everything was related to the US dollar. And the price for major currency pair in this week is nowhere, actually nowhere. So what I did, for example, this week, I watch the Monday's low and Monday's high. And looking that range, I compare what's happened for every single important major currency pair, and we can see that we are, I can say, in the Monday range and around that. Nothing happens, no new highs, no new lows, and this is something that these characteristics for this week. What I can tell about interest rate decisions, we had two interest rate decisions for US dollar and for British pound. The both decisions are the same. No interest rate cut. However, we can see that little bit dovish report for US dollar. The major word for all that reports were uncertainty. So everybody, even the Powell, use that word too much, and they don't know what will happen, and they don't know what will happen, and so on and so on. But I heard one very important thing there, and it was that the Fed, they think that we will not have consequences of these Trump tariffs in long run. That this is the short time, and I think that this part of the speech push a little bit dollar higher based on my observation. I'm not so big expert there. But if we analyze US dollar for this week, we can see it's still in some range, in some consolidation. So we didn't continue to go downside, but we didn't go upside too. We're in some kind of consolidation. And all these currency pairs and all these movements are very, very in some small range. And I think that this week shows that fundamentals sometimes either they can push, fundamentals can push the market, but in this case, we didn't see any kind of push either on the bad news, or on the good news. I think that it will be very, very slow, and everything is around the US dollar. So, which I don't like, because I like when I have additional trigger as a fundamentals, so I can enter into trade. And sometimes if I decide that my trade be a swing trade, to be relaxed and believe in everything of that. However, what I can say right now, based on some fundamentals the last couple weeks, what we can see is that US dollar is in downtrend, that Aussie dollar, Kiwi dollar is some kind uptrend. Even we have a couple bearish days, but the very good GDP, and later I will show the charts. We are on the daily chart in some kind of the bullish move. And the same thing is for euro dollar and British pound dollar. So what I can tell is that I will focus on the main bias in next week to see all major currency pairs against the dollar still in the bullish mode. So I just wanted to share this with people, which for my personal observation is that I believe that all this push lower for major currency pair is something that is just the macro structure is that we are still in bullish mode. So right now I can just show the most important thing and the US dollar index, just to see how that looks like. Right now I will show the screen of the US dollar
Igor,
index.
before you carry on with that, just to sort of follow up on what you're saying about fundamentals, I think one important thing that Jerome Powell said or made mention of several times was the end of running down the balance sheet. In other words, potentially, or at least leaning in towards quantitative easing rather than tightening. And I think that was the signal. We saw the VIX drop below 20 at the same time. And we've seen the dollar drop, as you correctly said, and sort of languishing, trying to correct a little bit, but generally in a downtrend. I think all of those are quite positive for the markets in general. And I think the dollar will, I think is probably due a little correction, but generally in a downtrend. But I think the running off of the balance sheet, and we've seen the 10-year yield dropping below its 20-period moving average too, which should also be negative for the dollar.
Yes, all that stuff. I monitor probability that we can see interest rate cut for US dollar. So I think that probability that we see the interest cut for the dollar in May is 77%. But everybody expected that we can see in June. So we are somewhere there. So like I said, I just monitor all this stuff. And I'm a little bit confused because of the movements of other currency pairs, because when I watch euro dollar and British pound dollar, what I want to see is a bigger retracement and then the bigger move upside. But right now it's too slow. Something that I didn't see. These movements are normal for commodity currencies like Aussie dollar, Kiwi dollar, like US dollar CAD, because they're I call that the slow burning currencies. So they can go very slow upside, downside, or some consolidation. They can be very, very slow, but usually British pound dollar, especially British pound dollar, is not so slow like now. And I'm watching that and a little bit confused, but like I said, I will monitor and I hope some movements during the next week. Just to show the US dollar index. What is the important here? I put the pitchwork, and this pitchwork here, I took highest high and lowest low from the last year, and make, of course, just to remove this indicator, okay, like this. And I just monitor based on this pitchwork the movements of the US dollar. And I can say that from the end of the January right till up to now, we really created a strong push downside. And we can see the relative strength index on a daily chart is really, I would just show the bias. It's a bearish bias, still bearish bias. And one of the possible things that can happen, just technically speaking, what we can see is that relative strength index can go and touch this trend line in some moment. That can be around this middle red line of the pitchwork, for example, somewhere here at the 105 level, I don't know. And then there is a possible scenario to make continuation down. So this is, of course, just technically based on some kind of experience. But usually when we have this kind of the drop, strong drop, I don't expect this price just to start to go up again without any additional movements. So usually we can see few attempts before we change the trend. And based on the market structure in the last couple of years, what I can see for US dollar currency, and of course for all other currency pairs, that we have some kind of cycles. And US dollar cycle, for example, it's a 3-4 months in one direction, 3-4 months in other direction, and etc. We have for a lot of currency pairs later when we discussed about each currency pair. I will show that's on the screen, that picture. And right now we need, I think, maybe at least 1 month based on that projection to have a movement of downside before maybe we start again to go up in the US dollar. Just I'm talking purely technically and based on these previous market cycles. So I would like to see maybe some push, like I said, maybe next week or something like that, and then again a bearish move, maybe even up to 100 points, and after that maybe we can see change in the direction of the US dollar currency. But of course, I just create scenarios, most possible scenarios. But I would like to see that, because if we really next week see a pullback for euro dollar and British pound down, and for US dollar up, and then again one higher push for euro dollar and British pound dollar, I think that can be really good setups for traders, especially for swing traders, because you can catch the bigger move in that case. Because this kind of the consolidation is not good even for scalpers, because these range are not clear range. This is the little bit very tricky for trading. And I know from my personal experience, either for range traders, that the market conditions right now are not so good for trading. And just to tell that, okay, I will tell later when I discuss the other currency pairs. Just I want to ask you, James, do you have some observation related to US dollar currency?
Yeah, sure. Let me just put up my screen quickly.
Of course.
And with a bit of luck, this will work.
Yes.
All right. So dollar index. I think pretty much exactly what you said, Igor. I don't disagree with anything at all. My charts are different. I don't have the pitchfork on mine, but I've got things that are equally as good. There's a green zone here, which is a Fibonacci level. Yes. If I can show you all the way back here. So that's I think the 50% retracement, or was it 38? Anyway, it's a Fibonacci. It's 38.2%. It's also this previous swing low over here where the trend line is, that low there. And it's also roughly where the 20 and the 200 period moving averages are. So if we retrace just to the 200 period moving average and no higher, that's at 105. Yeah. So exactly what you said. I think that's more likely than not. So we're at 104 now. So that's 100 pips. And then we could get a little higher. I wouldn't be surprised if we pierced it and got slightly higher to the underside of the swing low. And maybe even, I doubt it, but I think this is less likely. But let's say the top of the green zone, 105.40. So between 100 and 140 pip rally, and then a continuation downwards. And I'll just draw that in for you very quickly. I love these charts. When I started trading, I drew quite a lot of my charts I drew by hand. So something like that and down to the bottom, I think 100, back to 100, or yes. Like that and down, back to 100. Very simple. So that move up there to this region, anywhere around there is 100 to 140 pips. And then if I switch across to my other charts, I'll show you where we are. I don't have a position on the euro or the pound, but I've got a long position on the dollar yen right from the bottom there with that view in mind, like you just said, Igor. So we're long at the bottom, but I'd like to see this break through the trend line. And if I add 100 pips onto the dollar index, it would be 150 pips here on the dollar yen. And we're at 100 and call it 149 now. So I think we could get up to, I don't know, 150, 151 probably on the dollar yen. Yeah. And there's once again, there's the 200, the 50 period moving average about to perform a death cross. I put a tweet up on the death cross scenarios earlier. We're seeing death crosses on NVIDIA and on IWM as well at the same time, but about to form a death cross. And I consider a death cross to be really neither here nor there, but it's a good resistance level if we did get up to that level at about 151.5. And so we got a position on there. But if we do drop down in the euro and the dollar and the pound, which it looks like it's going to try and follow suit with this idea on the dollar index, then I think, and if we see, relatively feeble moves higher on the dollar yen, we should see the euro yen and the pound yen and the Swiss yen and the Aussie yen all dropping off. And the only other trade I've got on currencies is this euro yen trade, which is targeting 144 all the way down here. And it's not going to happen overnight, obviously. This is a few months, but we're on our way and doing quite well so far. So we got short at the top and at the trend line. But generally, I think your ideas on the dollar index are pretty much spot on, in line with mine.
Yes.
Yeah. That I don't know if you want to go into some of the majors that you're busy trading, or if you want to look at the setups now, or do you want me to start with gold and oil?
Start for gold in oil, and later I will continue.
Okay. All right. Well, let's start with gold, and I'll go on to this page here, and you can see my position on gold. So this is actually, Igor, this is not very dissimilar to what you're seeing on the pound. You mentioned the pound was very trapped in a tight rising range, like gold has been. Also just above a trend line, interestingly. Let's just go back to the pound. So we have a very similar sort of structure here, above the trend line or channel line, a feeble, tight, packed, consolidated, rising channel, and starting a bit of a breakdown on the pound, and exactly the same sort of thing happening on gold. We went short at the top here for a couple of reasons. All right, let me just explain to you where we are. This is the day chart. Let's go to the day chart on gold. Let's start from basic principles. So gold moves in a very distinctive manner. We get fairly steep rallies with very little look back. These are mostly lockout rallies. It's everyone that didn't get long on gold. It happens every single time. You can see all of these rallies here. The market looked like it was going to go the other way, and not a lot of people were long on all of these. They're all sort of liquidity gaps. And then at the top of those, the market consolidates for generally 3 to 6 months, like you were saying on currencies as well. Yes. So, for example, we had a big move up over here, and then we consolidated from the middle of April until August. So what's that? April, May, June, July, August, 4 months. And then we moved up. We consolidated for another 4 months or so. We've moved up. The next thing we should do is consolidate for 3 or 4 months when we get to the top. We may have got to the top, or we may not have. Well, I'll show you. There's actually a couple of other ways you can pick tops on this, Igor, which I picked up from someone else on YouTube who I know. but I'll show you that shortly. So gold moves in this particular fashion, these large lockout rallies, and then sideways movement, which gets everyone bored and negative and pessimistic about gold. You see it every single time. Everyone starts saying gold's going to crash, going to collapse. It's not going anywhere. It's stuck. Central banks are selling it, whatever it, all sorts of bullshit and news stories come out. And then gold promptly reverses and goes back up. Here's a very good example, and one that I was actually trading myself down here at about 1,600. Can you believe 1,800? Can you believe? In fact, I think we got to 1,600 prior to that. Yeah. So we were buying this triple bottom, and everyone was so negative on gold. And after that third attempt down, this is where look at the trend line. I mean, it's just negative, lower highs, lower lows, all the way down. Then we got the triple bottom. Everyone was negative. It looked like a descending triangle, actually, like it was going to break down. And then it just broke straight up and rallied up by 1622 to 1780. So that's $160 without looking back. And then that sideways consolidation, everyone gets bored. And then we get, we had a couple of moves here. Everyone gets bored, and then you get these lockout rallies, which just leave everyone behind. So I expect the same thing will happen. Gold does it every time. It's nothing new. And we've now got to the top of another big rally. And we've rallied from this recent low at 2,600-ish to 3,000 and some change. So, that's $400. So it's not going to carry on going up for any particularly long length of time, I doubt, before it does what it normally does. And it's going to get everyone buying at the tops. It's going to fall back down, lock out, cancel out all those buyers, get everyone negative, get the market weak and negative, everyone looking south. And then after a few months, it'll probably rally up again to new all-time highs. So how do we pick the tops, and how do we trade this? We don't want to be buying at these levels because that's what everyone's doing. And when it's in the news, like it is at the moment, gold is all over every newspaper, everywhere you look. And, when it's in the news, and it's like NVIDIA as well, yes, and Bitcoin often happens, all of these things, and everyone gets long, that's when the market's due to correct. One simple way of doing it, as I said earlier, is by looking at, so basically what I'm looking for now is shorts on gold. Okay, so and it's very much like trading many other commodities. We want to try and, when we're at extreme levels, lows or highs, we want to try and buy it or sell it at those levels. Remembering that even though gold is a commodity, it's also an investment metal. And so it's more inclined to move upwards, continuously up. It's like the stock market or Bitcoin, crypto in general. It's a one-way market, but it's also a commodity. And so we do get these prolonged range periods. And it's at those times, we're at the start of those areas that we want to start trading those pullbacks, getting down to the bottom of the range, buying the bottoms, selling the top. And we can do that for, as I said, 3 to 6 months. But we've got to pick the top first. And there are a couple of ways you can do it. And a very simple and effective method that I picked up from this person that I follow on YouTube, not related to gold or stocks or Forex, they trade crypto, but is by just simply drawing trend lines. And you'll see I've got a number of different trend lines on here. It's a bit of a mess. I'll try and clean it up, perhaps, if I can. All right, let me just clean these out and start afresh. Actually, it's a good chance for me to actually clean my chart down completely to a naked chart. Let me show you what I've got on this chart. So there are no lines. The only things on this chart now are the indicators that I use, and not very many of them. I've got a 20 period, a 50 period, 100 period, and 200 period moving averages. Now the 20 period moving average is the short-term momentum indicator. And you can see on gold, we're well above that at the moment. We try to hug the 20 period moving average. When we get too far away from it, we're always due to pull back a little bit down towards it and then bounce off, as you can see, in a strong uptrend. We've now done that. We did it twice here, down through it a little bit, up a little bit, down again. And now we're heading back down towards the 20. The 20 will also move up at the same time. So we don't have to get all the way down there. The 20 will move up day by day, and we'll eventually meet it at some point. It could be that the price has now formed a top and that we've got to consolidate for 4 to 6 months, 3 to 6 months, and therefore we'd be looking for deeper pullbacks. Now, it's a very simple method that one can use by using a trend line, and we look for the steepest possible trend line to draw and just draw it in. And don't spend too much time on this, just eyeball it and draw in a trend line, and that's all you got to do. Now that's a short-term trend line. We also want to draw in the longer-term trend lines, and so we draw in one that's slightly shallower and longer. And there's a decent one there, as you can see, connecting that low and those two lows there, and it's got a shallower gradient. We could even draw another trend line if we wanted to, and I always like to have, you know, 2 or 3, and we can draw one right from the very bottom here. Where's my trend line? Right from here through that low all the way to there, and that's a much longer term trend line ending up at about $2,400 at the moment. The other thing I like to do is to put in long-term Fibonacci levels, and I'm just going to draw that in quickly from the bottom to the top. And that's why all my charts on YouTube and Twitter and so on look green or pink or blue, because I've always got these Fibonacci's drawn and they shade the entire chart. So, right, now let me explain to you. If we break down through the shorter term trend line, that will confirm, and the 20-period moving average, and you can see often the steep trend lines coincide with the 20-period moving average. And so when they're on top of each other, like they are kind of now, almost on top of each other, that forms a really good, strong support level. And we'd expect that if the market does move down through there, that we'll get a breakout pullback type trade. I'll illustrate that. I should be using red candles here, but a breakout pullback trade would be maybe down to the 50-period moving average. I told you the 20-period moving average is the short-term momentum moving average. The 50 is kind of the medium-term moving average. So as long as we're above the 50 in the medium term, in the swing trading sense, we're still bullish. When we're below it, we're bearish. And then for the longer term, and traders and investors, the 200-period moving average all the way down here is the ultimate sort of support and direction indicator. So that's why I've got all of these moving averages on, just the 4 of them, and I don't use them for crossovers or anything like that. No MACDs, no crossovers, no golden crosses, no death crosses, no EMAs, no DMAs, no VWAPs, nothing at all. Just these 4 simple moving averages, and I use them as support and resistance. So if we did break down through there, perhaps down to the 50, which would act as support as well, and these swing lows, and we could expect that to return back to the underside, retest the channel, the trend line, and the 20-period moving average, and then move down to the next level. And then the same thing, a bit of a bounce there, maybe back up to the 50-period, break down through there, maybe down to that order block, maybe down to the 200, and then a retest from underneath, and then a continuation. And that's the sort of thing I'm looking for on gold, and we're currently short. And I'll tell you why I got short right now, but I'm just going to change the color of that line. So that's the kind of thing I'm looking for on gold. And then by the time we get down to about, I don't think we'll get this low down. I doubt it, but we might. I never discount the sort of extreme move. That would all be all the way down to 2,700, 2,720. It's quite possible. There's a big swing high here, which will act as support as well. It's nearby that trend line. That's at about 2,800. And there's a Fibonacci level all the way down here. And I could put some shorter term Fibonacci's, perhaps one from this last swing low here up to the top, something like that.
Yes.
And now we have another Fibonacci level right there where I've got the end of that arrow, in fact, and that's the 50% retracement. There's a 38% retracement right here on top of that last swing high. And that's at about 2,800, just below 2,800. Right, so that's kind of my plan for gold. We're now quite well in profit because I got short right at the top. And the reason I got short was simply because of this, going to the 4-hour chart. Tweezer top right there. Tweezer top candle at the top Bollinger Band. Well, through the top Bollinger Band. I think the Bollinger Band's drawn on here. And looking for shorts, looking for low risk shorts. So Tweezer top offers that. A daily close or a 4-hour close in this case above that tweezer top would have invalidated the short trade and forced me to hedge the position with an equal long trade, long position, but with a very small difference between my short and the long hedge. So a very low risk trade opportunity. And as you can see, we're well in profit now, and that's moving down nicely. So that's my overall idea on gold. And just be careful of these long periods of consolidation is the advice I can offer. And these pullbacks often, the problem with gold is you get these lockout rallies, as I mentioned earlier, which lock everyone, it all looks horribly messy. It's heading down hard towards the trend line. It bounces. It fails to get any momentum back down to the trend line. Everyone's looking short. No one's getting long. And then we get these lockout rallies and it goes straight up without looking back, a little bit of a pullback and another move up. And basically everyone just gets long. And now what you've got to be careful of is these big pullbacks. We probably get a steep pullback and then consolidation for a number of months. And I'll just illustrate the sorts of things that can happen. Steep pullback, consolidation for ages and ages, ages. There was an even steeper pullback at that point, and then we start moving up again. Same thing here, big move up, consolidation for ages, big move up, consolidation for ages, and so on and so on. And I think we're at that sort of stage now. Now, having said all that, I'm not saying we can't go much higher on gold. It's bullish. This is a counter trend trade. It's not a full size position. I don't take a lot of massive size on counter trend trades because they're more risky inherently, and the market direction is obviously up. So any moves down are considered to be counter trend. We should exit earlier rather than later. We should be very careful of bounces off any of these levels and make sure that when the market does change direction, we don't want to be left behind just in case gold, does another lockout move and moves up dramatically higher and leaves everyone behind already. Again, not already. But I think this is looking okay so far. On the 4 hour, on the day chart, of course, this is the day chart. So it's looking fantastic, actually. I retract that. On the day chart, it's looking great. And on the 4 hour, yeah, in fact, just since we've started this live stream right now, it's just moved down this candle. So a big move down in the last little while we've been talking from, I don't know, 3,030 down. We've moved down almost $30 whilst we've been talking. So quite strong move. Right, that's gold. If there are any questions on gold from folks watching, they'll be appreciated and I'll answer those. But let's then talk about oil and go to this screen. And there are lots of different ways you can trade oil. You can trade ETFs or CFDs at different brokers. You can trade the futures if you want, if your broker offers the futures. And you can also trade WTI or Brent crude, WTI West Texas Intermediary or Brent crude, and on different sides of the channel. Brent crude more in Europe and the UK, and WTI obviously West Texas, so intermediary. So I don't trade Brent crude very much. I mostly trade WTI. I think it's a more liquid market and probably behaves technically better than Brent crude, although I keep an eye on both of them. The reason I've got both of them on my charts is because sometimes I can get a little clue from what's happening on Brent crude in terms of chart patterns that might not be immediately noticeable or obvious on WTI. So I'm able to, just checking if there's, is the sound okay and everything good, Igor?
Yeah, perfect.
Yeah. It's always a bit weird because I'm sure you experienced, I've got my charts in front of me, but not the streaming screen. So all I'm looking at is my charts. I don't know if your setup's a bit different, but so WTI. Now we've been short on WTI for about 2 years. I think we may have taken, I don't know, 100 short trades and maybe 10 long trades in the last 2 years. And all of my short entries are indicated on these red arrows, and we're short again more recently at that last red arrow at the bottom right-hand side of the screen. Let me zoom in to show you where we got short. More or less the price that we're at right now. And we've broken down into this range, consolidating just a little. We did actually close above that red line on the last daily candle. That was yesterday. So quite a strong move yesterday, but pulling back quite sharply today. If I look at this on the 4-hour chart, you can see quite a fairly dramatic reversal actually after gapping up and then slamming down again. Look to the left-hand side here, by the way. If you are trading and you don't know what to make of this pattern that's going on here right now today, have a look at the last time we reached that level at 68.60. So that was on Tuesday, and it's Friday now, so 3 days ago, and we smashed up into that level. It's exactly the same height, maybe just a couple of cents higher on this occasion. But look at the reaction. We had a big bearish engulfing candle, and the market moved down very, very dramatically. The biggest candles on this page are those two big bear candles. Okay, that one's quite big as well, but two big bear candles bouncing off the bottom. $65, I believe, is when certain companies, drilling companies, refineries, I don't know exactly. I'm not an expert in that field. You'll have to ask the guys at Energy Rogue, who are experts in oil, my friends over at Energy Rogue in the US. But they'd be able to tell you what the break-even prices for various parts of this industry are, and for the Saudis and the Americans and whoever else is dredging up and drilling up oil all over the world. But I think it's around about $65, and that explains this this shelf or level that we're stuck at the moment. And if we look at that on the day chart, you can see how obvious it is, where the market does not want to go below. In fact, we haven't been below $65 since 2021. So, but we've tried plenty of times. And I don't know if you guys any of you are trading oil in 2020 when we dropped below zero. It doesn't show it on this chart, but that's what I've called MOAB. This level here, MOAB, stands for mother of all breaks. It's just a silly pun. There's a bomb that the Americans have called MOAB, the biggest bomb they've got, I think. So mother of all bombs, they call it. This is mother of all breaks. So look how many times we tried it, but more importantly, and we're trying it again right now as we're speaking, but more importantly, look at the shape of this last couple of years where we've been trading short. It's a very beautiful, very clear, very clean, pristine even, descending triangle. We've got the falling trend line at the top. It's part of a larger channel, but we've got the flat bottom at MOAB and the falling trend line at the top, which is also part of the falling channel line at the bottom, which is also my target for this move. So my target is $55, $56, and I think we could bounce back up to MOAB and then continue on down below $50. And no one thinks that's remotely possible, but I do think it's possible, and not because it's happened before plenty of times, but because of this chart pattern. And if I'm ever in doubt about anything, about politics, about economics, about what's going on in the world, and there's a lot of confusion going on at the moment. All of you will agree with that. And whenever there's confusion in the world and the markets and politics and economics, there's a very clear picture that you can look at and cut through all of that confusion and noise and chaos. Just look at your chart. The chart tells you what's going on. And this oil chart is telling me that oil wants to break $65 and head lower to the bottom of the channel. It's pretty clear. And every time we've sold oil over the last 2 years, everyone's been in the other direction for some reason. And I know the reasons. Obviously, we all know there's been war all over the show in oil producing, oil transporting, oil-rich areas on both sides of the globe. So one would expect oil and natural gas to have gone through the roof. In fact, the opposite happened. Natural gas got down to about $1.50 a few months ago, and oil has just been heading lower consistently all the time. There are a couple of political reasons for this as well, but there are also reasons which are unknown to us that the Saudis might know, or the American politicians and economists might know. I don't know the whole picture at all, but I kind of got an inkling that oil, for various reasons, probably might need to just break that support, even if it's just briefly. And my target is $55. So with that big picture in mind, this is where we are today. And I have one short position on oil from there at $68.60. And we're just about at that price right now. And I'm considering adding on another short position. And the way I'm playing this is I'm looking at the bigger picture, and I'll start to add positions as we rally back. Because remember, I've got an idea that this market's moving down. I'm not going to change my mind on that until we break up through some of these key resistance levels, this big red order block being the most important. And that's only about $10 above us. So it's not a long way. And I'm happy to sell more oil until we break and close above this red order block. Let's call that $80. If we break and close above $80, I'll immediately hedge whatever positions I've got on short on WTI and buy an equal size and ride that out until eventually it turns around again. And that's basically my line in the sand, $80. Yes. So unless we break that, I'm going to be shorting WTI on every rally, on every pop, particularly into these moving averages. There's the 200, the 50, the 100, and we've broken up above the 20-period moving average in what looks like still to be just a bear flag. Nothing more than that, nothing less than that. And you can draw a bear flag in here pretty easily by just drawing a parallel channel, something like this. I'm just going to draw it very roughly. So that's a kind of a bear flag, and we'd expect the market at some point, if it is going to go in the direction that I expect, where's the path? Expect the market perhaps get to the top of the channel there, the bear flag, maybe even just up to these moving averages, a little bit higher, maybe just through the top. Channels don't last very well in today's markets with algos and so on. Something like that. I don't think it's going to be immediate. I think this is a messy, choppy market. Oil is generally more so at the moment because of all the political wrangling and economic stuff going on. But I think that's the sort of thing that we could get, and that bear flag will eventually break, maybe retest from the underside again, something like that, and then continue on down. So that's kind of what I think with oil. And then if you want to time these entries a little bit better than I do, perhaps if you're a day trader, more of a short-term trader, and you're not a swing trader, swing trading doesn't require such precise timing. We trade off 4-hour charts, so we don't have micro precise entries, because price might have moved $1 or $2 or 50 pips by the time we get a 4-hour signal, and we may be a little late or a little early or whatever it might be. So the timing isn't that important. But if you do want to time this, the best thing to do as a swing trader, let's just go down in the charts. We're looking for a short position here. I've already got one, of course, but if you were looking for a short position, you'd be looking for reversal candles like that spike high there, or this engulfing candle that we talked about earlier, or this rounded dome top with a inverse hammer over there. And there's another bearish engulfing candle there. And so you can use the 4-hour chart to time these entries. But if you're a day trader or a scalper, or even just a normal 1-hour chart trader, the bog standard age-old 1-hour chart, you might be looking for those sorts of things on here. A little bit more difficult, but here on this 1-hour chart, for example, there's a 1 up, 1 down reversal pattern. It's one of the candle patterns that I look for, and that performed its job beautifully. And we'd be looking for similar sorts of things. Right now, it's just edging up, so we don't have a new sell signal. But the moment we do, I might be adding on a little bit more to my short trade. That could end up a little bit higher than where we are, as I pointed out. Maybe the top of the channel or the bear flag. I could actually drag this along a little bit longer like that. It's not that accurate when you can see it on the 1-hour chart here, but it's an approximation. Maybe we'll have to get to the top of this bear flag, something like that, or maybe just to the center line over there. These channel center lines are always very useful as support and resistance. So maybe something like that, bit of bouncing around and then down. So if you want to time it on the 1-hour chart, look for that sort of move, but look for the 1-hour reversal candles, and those will help you out in timing it. And if you do use things like a 5-13 EMA crossover on a 1-hour chart, if that's your bag, then go for that as well. It's nothing wrong with that. It'll just give you a slightly different timing on the entry. But if you want to go to a 5-minute or a 15-minute chart, and you're a real day trader, you'll have to start trading this in a completely different manner and draw your lines in the sand on a shorter term time frame and say, well, if we break above, let's say 68.50, that'll be your stop loss could be above there if you were looking for a short, and then you'd be looking for reversal candles, particularly at places like the channel center line, or this order block, or this 50-period moving average, or this 100-period moving average. So there are all sorts of ways that you can time these entries on any time frame. But for me, it's a little bit tricky trading oil and natural gas on 5, 15, even 1-hour charts. And I prefer to trade them on 4-hour charts. So that's my position on WTI oil. And I'm sticking with it until otherwise proven.
Oh, beautiful.
Yeah.
Beautiful.
All right. I just realized my whole face was in the screen because I'm not wearing spectacles and I can't see the screen. Sorry about that.
No problem. Okay. So can I take the charts?
Yeah, go. You do your thing there, Igor.
Okay, thank you. So right now, I will share my charts just to show what I'm looking for. But I will share this chart because we got one question in comments, and the question is from Andre Alessio Berti, and the question is British pound dollar pullback 1.28. So I will just using the Fibonacci levels and Murphy levels, I just want to see where are some important price levels. Actually, a lot of these levels related to British pound dollar, I'm using based on the previous statistics and history. So I will just do that on the naked chart, just that he can see that maybe better. So, for example, if we take the weekly chart on the British pound dollar, we can start to put resistance and support levels without any problem, just looking for a weekly low, weekly high. And we can do that, like I said, all day long, because there are a lot of levels that we can do on the weekly chart, daily chart, later, etc., etc. But what's happened is I was watching one from the big famous trader, Paul Scott, and he talked about the statistics and history of the price levels, and he told that a few years ago that levels for all major currency pairs, either for some stocks, either from commodities, repeats itself year in years. And it's not just 1 year, 2 years, 3 years. Sometimes you can go maybe in the far 80s, for example, 30 years. I don't know what is the history here, but it's not so big. But you can see that, for example, let me take this level. It's a level 1.4223. It's a level that is it's a major resistance in the last 6 years, but it was support maybe 25 years ago. And then you will see that some price levels reacts as a support and resistance years and decades. So he showed some charts that you can see in 70s and 80s for some commodities, the same price levels, and the same price levels to the pip. So can you imagine that you see some commodity, the same reaction 40 or 30 years ago? So based on that statistics, either for British pound dollar, now I will back to the major chart, we can see that some levels reacts very, very often. So if you ask about the first institutional level for the British pound dollar, the first institutional level that we can see is this level around 1.285060. It's a very, very strong institutional level, and we always see reaction around there. All these indicators, even the Fibonacci levels or any indicator that we can use, can show sometimes will not show, but realistically, some levels are so important that you need to watch them a lot. So what I want to tell you, Andrew, if I so just to check the real name here, and Andrew, I hope that I said the name the right way. If we watch the British dollar chart right now, what I want to tell you is you should watch this level here, like I said, 1.2850. And the next level that's very important, it's this area around 1.27 price level. So on this chart, when we watch Fibonacci levels, maybe we can see that levels, maybe not. But realistically, that levels, we always see some kind of the strong reaction there. And that just repeats itself all the time. So about this pullback, of course, you can use the Fibonacci retracement like I just put on this chart. And we can say that around 1.28 is the first target if we have some kind of a pullback there, and around 1.2660 we can see another push. However, based on experience, I think that this pullback will not go so much big like that. I think that maybe it can be the level 1.28, and the next should be around 1.27 up to 1.273, just maybe to show that I will just maybe it's not maybe it's not the right. Just remove this object. Sorry, because my mistake. Oh, I have so much object there. This is the rectangle. Yes, this is the right thing. So I would just maybe put this big red line, just this area here, from this area here, can be really important price support right now for British pound dollar. And I think that this support, so if you go to 2024 and 2023 year, you will just watch these levels and you will see, just maybe like this, you will see so many times price touch this level. Maybe if I put the volume profile, you can see how many times buyers and sellers were around these levels, and you will see how that very strong area. However, like I said, this is just possible scenarios. We can have a push maybe another week and maybe go higher. We don't know what will happen with market. However, I like when I see healthy pullback, because after the healthy pullback, we can see stronger movement upside. When we analyze the intraday levels and the intraday movements of the British pound dollar, I can say that today, on Friday today, I'm bearish for British pound dollar. I'm bearish because a relative strength index indicator shows, as you can see, I think this is from March 17 up to now. So last 4 days, we're some bearish movement. And I know, for example, when you have a bearish divergence and you are around level 70, for example, or 65, that bearish divergence very easily can disappear and we can go higher. So there is no impact so big. However, when you reach a 50 level, that divergence really matters. And usually around that 50 level, sometimes we can see the push just lower, like we had last night, for example. We were on the level 1.2970 and we went almost 40, 50 pips down. So this is the proof how divergence around 50 level relative strength index has bigger impact and usually bigger move. So traders should be patient. So if you see the divergence on the chart, be patient. Wait at least to level 50 around, or 55, something like that, before you enter into trade. Of course, waiting for a good price level. And you will see how price can very fast move down to the level 30, for example, or something like that. So this is the very important thing. Another thing that we can see on the chart is this blue rectangle. For traders that watch the first time that I'm talking about currency market and everything, I just want to tell that this pivot point area is drawn this way. First, I find a pivot point. Pivot point is in the middle of this blue rectangle. Above and below is high plus low divided with 2. And I just put it up, down, and create this rectangle. Why I did that? Because I figure out that there is a pivot area better than pivot line. Because a lot of time I can miss couple pips a pivot line, but pivot area I'll never miss. And I will show you one thing. For example, today is a completely bearish day for British pound dollar. We can say that because from the midnight up to now, we are just going lower and lower. But look this, in one moment, from the beginning, we always just touch this pivot point area. Maybe at euro dollar, you can see much better. I will just show you right now. Look this. We are lower, and we want to create a fake breakout. We touch the pivot point area, and again, we fell down. So I figure out that we always, during the day, at least one time, we will touch this pivot point area. I think in 95% of the cases, we will enter in this pivot point area, which is crucial. And one very important strategy for traders that I recommend, if you, for example, wake up during the Euro session, is the strategy that a lot of algorithms during the UK time and European time work. I will just repeat again about that strategy. So you watch the first hour of the opening range. For example, we are watching euro dollar. This is the high 1.08. Let me say 60, and the low is 1.0850. Okay, so you have a 10 pips. The price starting to go down, go down, go down. But one time during the day, either during the UK opening range, either during the US opening range, if we miss during the European session, we will have a fake breakout and we will touch the Asia high like this. And then we start to go down. So if you want to be a bearish and you miss the point, you wait during the day, you wait. In one moment, wait for the fake breakout and enter and make a sell trade. Of course, your bias need to be bearish. Relative strengthening trend line should be bearish. And what I prefer, I don't want to go against some important event or news or something like that. I will follow that. And this strategy can be very, very beneficial. And I can tell you that it's a really good strategy because you're confident that your risk reward ratio will be excellent. You're risking small amount of pips. You try to make more pips. And the good thing in this strategy is that you respect the main bias that you have. And you wait for the pullback, which you know where can happen. And that can be either the Asia low, either the Asia high. So what I can say about Fridays, because today is Friday, is one of the rules that I have during the Friday is never sell Fridays low, never buy Fridays high. This is my rule that I use last, I think, 10 years. Because in the past, so many times I have a fake breakouts, a lot of problems in trading. And that rule I just keep for myself. And I do not like to catch some trend moves during the Fridays. Friday is the day when usually you will have one low, one high without some great extensions, except if we have some really high impact news in Thursday. So the Friday is some crazy day. But if the normal Friday is usually during the Friday, I just wait, find a low, find a high. Maybe if I, for example, see the high to low movement, I'm bearish. Maybe I will wait to see some movement up and maybe make a sell order, maybe not. I do not try to push trading during the Friday because Friday is the no man's land, something like that. It's usually either the range trading, either the trading between the two levels, from high to low from high. And there are a lot of Fridays when we can see daily doji candle. So just price is nowhere under the something just maybe the same as the open price. The close price is same as the open price or something like that. So this is the something that I respect related to the Fridays trading style. Now, what I want to show you too is my trade. It's still active. I just want to share with you that trade for traders that watch this the first time. I just want to tell that 2 weeks ago at level 0.621. I made one buy order. I put the stop loss to 0.608 and I target 0.69. So this is the very, very, very optimistic trade, I can say. Of course, last 2 days, we see some bearish moves for all major currency pairs. And first it was a sideways. Now it's look some kind of the bearish. We have the first first support. We can be this trend line that I drew for the last couple weeks. And of course, I put my price break even. If we touch, it will be $0 for me. If we see a rejection of this trend line or maybe some area here, we can continue upside to see what will happen. Why I did this trade? This trade is not just because the technical in the moment when I entered the trade, I see this really bullish candle. I realized that this is the bullish shape, in the bullish forming shape in the beginning, and I enter into trade. The relative strength index was very, very good for me in that moment. I will just show you that. So in that moment when I enter into trade, it was something, let me say something like this. So it's some kind of the bullish trend line, and all that triggers. Plus, we had an excellent GDP report for Australian economy, and all that triggers push me to create this trade. I have fundamentals, I have technically, I have nice price levels, so it was clear for me. Now, maybe I make some doubt because of this movement. Of course, I will not close my trade. I wait to touch a break even, and if we maybe we can see the push. I don't know what will happen. Of course, sometimes I'm right, sometimes I'm not. So this is the main rule. And the next chart that I want to share with you is a New Zealand dollar. I monitor this chart because excellent report for GDP for New Zealand economy, very similar to Aussie. So we have a bullish trend line. When we draw a trend line on a relative strength index on the daily chart, it's a straight bullish. It's a bullish price movement. However, we are below 200 moving average. We are still in the bearish mode. But the same thing like Aussie dollar, I want to see higher, maybe to reach this high level from the September last year. We will see. For me, maybe it's better to go with the Aussie dollar. It's a better risk-reward ratio. I'm already in the trade, but I just monitor this trade to see what will happen because I believe that we can see some other new push. For me, we are still above 50 moving average. Maybe we'll reach 200 and maybe more. We will see what will happen. But fundamentals and relative strength index and the bias for me is bullish, so I am here. And one chart that align with your chart, James, is a US dollar Japanese yen. I will not trade this pair. This is just because I see that US dollar is weak, Japanese yen is weak, two weak currencies. I don't have some. I don't want to trade this kind of the trade right now. However, what is the interesting here? Maybe I can enter into trade if this scenario happens. If price breaks this channel, maybe, and we start to go up, and then we go down to retest this channel support trend line, then I can enter long. However, like I said, I'm out of this trade. I just monitor. I heard about your bearish bias. I need to admit, if we watch the chart right now, this is the bearish channel. So we need to respect the bearish channel. Only what I saw based on my relative strength index indicator, if I draw the trend line here, this is the bearish movement. But we broke this relative strength index trend line, and this can maybe the move upside. There is a probability for that, but it's not still the right time because we are still in the bearish channel. So right now it's interesting to watch, but what I like for US dollar Japanese yen, I don't like to scalp or maybe intraday trading. I can only swing because the movements of all yen pairs I don't like. I don't prefer. I'm not comfortable with that. So I'm just outside of that. So
hey, Igor, your chart there, don't move it.
Okay.
That channel, the center of that channel you've got is absolutely dominated by that tower reversal, right in the middle of in the middle of the channel, right there, yeah, to your left, slightly left, yeah,
here,
dominated by that. So yeah, just an observation.
Yes.
Can I show you something quickly on the pound chart? Just to follow up from what you just said, if you don't mind.
Okay. On the longer term or
Yeah, longer term, because you were talking about long-term moving out, long-term trend lines that go back decades.
Okay.
Oh, hang
Yeah.
on.
Okay. I can use this chart because here I have market structure. This is the daily chart. Yes. We can watch
no,
this.
I just wanted to show my chart quickly on the pound.
No problem. No problem. I will do that. I will just stop my screen.
I don't know if it's, oh, there you go. This is a week chart on the pound, Igor, and see this long-term trend line going back to, I don't know, it's 10 years ago.
Yes.
Look where we are. I'm going to zoom. Look, that same line from 10 years ago, cutting through there. Look how it was respected here for a little bit. I'll go to the day chart. It's that line there, the same line. And look where it is. The 20-period moving average is there, and the 200 is there too. So I think you're quite right. I think we should drop down to that very long-term, incredibly long-term trend line. It's still there. And the 20-period moving average, maybe the 200, and that would be down to 28. Actually, what Andre just asked in the question, 2,800, 1.28.
Yes, yeah. Very strong level. Yes.
Yeah, that's all. Just wanted to point, just back up what you were saying.
Yes, beautiful chart.
Yeah. I think we're finished now, Igor. I think the next bunch are waiting to come in. I'm not sure.
15 minutes more. We have 15 minutes more because we start. Yes. So, yes, please.
Sorry, I didn't mean to interrupt you. You can carry on with your pound trade if you want to, and your Aussie dollar.
Okay, I can just to show very short. I don't want to be, because I will just show that this chart just show right now. This is something that traders can use for free. This is the indicator that can be used on MetaTrader or TradingView. It's a free indicator. It's a Lux Algo market structure indicator, and I started to use in the last few weeks, because this indicator will show you the market structure for some periods. This is the story that I'm talking about. 3 months bullish, 3 months bearish, 3 months bullish, 3 months bearish. So you can use this indicator to confirm that. I use previously, in the last several years, I use relative strength index on daily chart. So when we break relative strength index on daily chart, we are getting into the bullish movements or the bearish movements, and this is the way how I track. But this indicator is very similar, and I can tell that the very similar to the trend line breakouts from the daily chart. So align with my opinion too. So we can see here last year, for example, we were at 1.34 for British pound dollar, and then in just 2 weeks, the market structure changed, and then the whole October, the whole November, the whole December, and 3 weeks from January, we were bearish. And then huge spike, we started to be bullish. Right now we are bullish. It will be February, March, a part of the January. So like I said, we can see the market structure, and this is very important for me because I need a long bias. Because when I have a long bias, my intraday bias will be better. And the intraday bias is very important. For people that watch, one day I show my trading journal, and I watch there that by average, I have a 70% right bias, but only 50% of my trades are profitable. What they want to say, I need to have very good bias, maybe 80% or 70 or above 70, if I want to keep my winning ratio to be around 50%. So bias is so important in trading, and if I have a wrong bias, there can be a lot of problems, because I will enter into wrong positions. Even I calculate and try to find after pullback and good levels and everything, but I just want to share with you how this how this market structure in the long term is important, even if you are intraday trader.
What is that indicator called, Igor?
It's called a market structure by Lux Algo and can be used on TradingView too.
Okay. Very interesting.
Very, very interesting, and really aligned with my relative strength index trend lines. So really, really, I can tell it's very good.
Yeah. I'll tell you something funny, Igor. When you were talking about this Aussie dollar trade, I think about 2 weeks ago, and I just happened to be watching it on the stream, and I thought, well, that looks quite a good idea. So I just bought some. When you were talking about it, at that time, I said, yeah, that looks good. I hit the buy button. Anyway, I got out. I think it went up like 70 pips or something, and I took profit at the top because it started to look a bit feeble, and then I thought maybe I should be back in this trade again, and I was thinking about that yesterday. And now you've said you're still in it. I might just jump back in again because it's very close to the stop loss, so it's a good idea.
Yes, when I monitor these fundamentals, a lot of them can be really wrong sometimes. But GDP is something that for me is the only indicator. There's no doubt that some economy is in a good shape. So when some economy have 4-5% GDP, there's no joke there, and you cannot interpret GDP in the wrong way. This is it. So when I see that some economy is better and better and GDP is growing, I can bet that currency pair in the long term will show some result on the charts. So this is the strategy that I know some institutional traders that, for example, they do not watch charts at all. They watch and compare economies, find the strongest one, the weakest one, pair them, and then go to the chart and execute the trade. And maybe 90% of decision is purely fundamental, and they're profitable. So, of course, for us that we are intraday traders, maybe swing traders, we are not positional traders, but this strategy is a little bit not for us. But I think that it's good to see when fundamentals can be at least additional trigger.
Yeah. I think with the Aussie dollar, not so much the Kiwi dollar, but definitely the Aussie dollar, and even, dare I say, the South African rand, have both been buoyed up by commodity prices.
Yes.
Metals and other commodities, lumber, and softs and grains that are moving up a little bit. A lot of that stuff comes out of Australia, even though most of it's just desert. They grow quite a lot and they mine an awful lot, obviously. So yeah, I think commodities, metals in general, commodities are generally going to at least stay strong. Maybe they won't carry on rallying, but I think they should stay firmish. And that's all good for the Aussie dollar, of course, and the Canadian dollar, maybe.
Yes. All that commodity currencies, Kiwi, Aussie, and US dollar CAD. I think that these tariffs can rise the price of all these commodities, and then that can bring maybe stronger economies for these commodity currencies. So we will see what will happen. It's a mixed. So it's very, very hard to predict how will these tariffs will change the world right now.
Yeah. But I think right now what we've got on our hands with the dollar is probably a technical bounce, irrespective of any of the other stuff. I think we need. I think that might jeopardize. I think what's going to happen with the Aussie dollar. In fact, I think I've got an idea in mind already that we could just drop down below that level of your entry, and make a nice wick down below there, or a bullish engulfing candle, something like that. And I think that's a good. Hopefully, it won't take you out, but if it does, I think there's still a good argument to be made for the bullish case, particularly with the GDP and the commodity prices.
Yes.
But I think there's a technical bounce in the dollar in probably next week. That's kind of might just scuttle your trade.
Yes, we will see. We will see what will happen. So I told myself, do not enter too much and exit from the trades, because I just made some kind of analysis for the last year and figure out that I have a lot of break-even trades, and 70% of them could be profitable. And I just closed them because I didn't want to risk money. And on the end, I calculate and see that it was a mistake. So this year, I will try to reduce position size, take a loss, but I will reduce the number of break-even trades. So we will see if it will be better or not.
Yeah. So what I do, Igor, it's a big problem that obviously I generally don't move stops to break even most of the time. Sometimes I do, but not very often. But I think so when I enter a trade, I never enter a full position. For example, I enter mostly just a quarter size, and unfortunately, quite a lot of my trades, I've got a 70. So I've been trading for 30 years. I think it's 29, maybe 30 years, and over the last 5, maybe 7 years, I've basically measured all of my trades, winners and against losers, and it's around about 71% winners and 29% losers.
Wow, beautiful.
I mean, it's not exceptionally good, but I think it's okay. But the one of the negative things about it is that because I've got quite a high winning rate, and because I'm reticent to enter a trade with a full size position, quite a lot of my trades take off in my direction are winning trades, but I've only got 25% size on it. But the flip side of that is I don't care about losing the trade if it goes against me. So I don't have the emotional and psychological stress, and a winning trade's a winning trade, even if it's only a quarter size. If the market goes against me as well, I have another opportunity to add some more size several times, 3 or 4 times, which means that I don't get stopped out very often, because if my general direction is right, but my entry level, my initial first entry level isn't perfect, I've still got other opportunities to enter. And so, if you take out the first trades that I take and the subsequent trades, my winning rate's even higher than 70%. But the flip side of that is losing out on the big wins when I get intra-trade and it goes straight in my favor immediately, and I haven't got enough on it. Locked out basically. So yeah, but it certainly helps with the psychological issues, and I think most traders experience psychological problems more than anything else: stress, anxiety, fear, greed, and nervousness, terror. Yeah. So if you can reduce all of that, I think that honestly I do believe that's like at least 50% of your trading problems. If you're a new trader, if you can get rid of the psychological issues, you probably do okay. And one way to do that is by entering with a small position initially, and then maybe adding a little bit more on later. And then hedging is the other thing that I do to avoid psychological damage. And so I don't use stop losses very often. I do sometimes, but when the market goes against me, I just hedge it, and then I don't have to do anything. I could wait a month with my hedge position, without doing anything. It doesn't make any difference which way it moves thereafter. And but I'm still in the market, so I've always got the opportunity to exit my hedge if I feel like I should, or exit part of my hedge and leave some of it open, and it gives me huge amounts of flexibility managing the trade. Yeah,
it's beautiful. I remember there was one viral text from, I think, George Krugel. The name of the article was "Pillow Test," and about the traders, that if you can sleep well, you pass the pillow test. This is the most important thing, that your position size is good. So this is
100%.
Really
100%.
Good.
Yeah, that is absolutely 100%. In fact, Igor, I don't know if you've ever heard of the Trading Tribe, a guy called Ed Seykota, and I'll spell it for you. It's Seykota. And he's in the book The Market Wizards. I don't know if you read those books by Jack Schwager. He's one of the guys in one of those books. He's been around forever. But he's also part of a bluegrass band, and he plays the banjo, I suppose it is, or a ukulele. And they've got a great song called, what's it called now? I can't remember the name. Anyway, but one of the lyrics in the song is, how do you know if your trade is right? You make a lot of money and you sleep at night. And that's my favorite line in that song.
Yes, beautiful, beautiful.
Yeah,
I remember.
So, yeah, it's called the Whipsaw. It's called the Whipsaw song. The Whipsaw song, And I listen to that song almost every day. I've got it on my computer and I put it on. It's a great, fun song, but it's got so much useful wisdom in it that I think every trader should listen to the song every day. So,
I will find that right after this.
yeah. Yeah.
No problem.
All right,
So
Igor.
this is the end of this beautiful session. So
Yeah.
I wish you the great weekend, James, and best success during the next weeks.
You too. Very much to you too. Whereabouts do you live, Igor?
I'm from Serbia, Europe.
Serbia. Lovely.
Yes.
I've never been there, but I will go there one day because I believe it's beautiful.
Yes, interesting and beautiful. So you should see the Belgrade. Yes.
Yeah. Fantastic. Okay, mate. See you next time.
I wish you a great day. Bye-bye.
Take care. Ciao. Bye, everyone.
Bye.
Hey, Michael. How are you doing, man?
I'm great. How are you?
I'm great, thanks. I see we a little bit early, but here we are. Good to see you again, man.
You as well. And I was thinking the same thing. Now I got to use your line. I'm glad I didn't start picking my nose.
I saw that. I see that. I don't know. I'll quickly share my screen if you don't mind.
Okay.
I know we spoke about the pound US dollar yesterday, among
Hey,
many
what's
other
up,
things.
Paul?
Hi guys.
Hey, Paul, how's it going, man? Good to see you again.
All good. Please continue, Jannie. Go for it.
Okay, yeah, I was just saying to Michael, we spoke about the pound US dollar yesterday, and it did move lower today. I think yesterday we were around this pullback area after it did that little breakout. So that was the breakout, the retest, and now it just continues to the lower end. So I think I just wanted to add something to that, and in terms of profit targets. So this is obviously the 1 hour time frame, but what I like to do is on the monthly time frame. I don't trade the monthly time frame, but it's a good time frame to get some data from. So if I let me just delete this line. So yeah, you can draw Fibonacci levels on the month itself, on the candle itself. Oh, not like that. Sorry about that. Don't do it like that. Okay, let me try again. Let me do that properly. Come on, work with me. There we go. So it's just like Fibonacci levels on the monthly time frame itself. So if you go now back to the 1 hour time frame, you've got some really good levels that you can target. That's the 23.6. You've got the 38.2, the 50%, and the 61.8%. Now, a realistic target is like, with fib levels retracement, 50 is a very strong support, 61.8 is also a strong support.
Right.
But the 38.2 for take profit is very good, because obviously the probability for it to hit 38.2 is much higher compared to the 50%. It needs to travel quite a bit more for it to hit to go to the 50%. So the 38.2 is a very good profit target. So that's all I wanted to say on the pound US dollar. I just wanted to continue the conversation we had yesterday about this particular market. But what's your thoughts on that? Like, is that something similar you do? Like, if you look at this, is basically the beginning of the month, obviously, because I just drew this from the monthly time frame, and then you get this massive rally. We looked at the monthly time frame. We saw that it was already peaking out based on the ATR, so it already moved the kind of ATR that you can expect, and now pulling back after you had this. It's not quite a head and shoulders. It's like a head and shoulders with a hunchback or something.
Yeah.
It's like
I know that pattern well.
All right. But when you see it starting topping out like that and it breaks the low and you get your typical things that you would like to see on smaller time frames, then the next thing is like to determine where can you realistically expect this to pull back to. And apart from the FIP levels, and the other level I would identify is obviously this pivot here. You see this low there?
Right.
That's also a pretty good level to set the target at. Okay, so that's
I mean, that's a really good idea. I mean, any system you can put in place which allows you to take profits once you've got confirmation that you're entering the downtrend makes absolute sense, because it's the biggest obstacle beginner to intermediate traders face. So great idea. I mean, I would tell people to look for a basic trend change dynamics, a lower high, lower low, but that fib level is another system you can use, and it's pretty solid. So that's a really good idea.
Paul, sorry, I think your mic is not connected. I think you're talking through your computer.
Let me look at what's going on. Thank you for that.
No problem.
Oh yeah, you're right.
Okay.
There we go. That should be better.
Yes,
Yeah.
that is.
You're back. Welcome, Paul. Nice to see you again. And
We heard you. It just sounded like you were like in a box, I guess.
I'm not in a box.
All right. So, and the other thing to note is like on FIP levels is typically very useful when you have strong rallies. Okay. And the longer the rally is, the steeper the more severe the pullback you can expect as well. If it's been carrying on for a long time and you combine that with, ATR, I'm a big fan of ATR, especially on the longer time frames. It just kind of gives you an idea of what you can expect more or less in terms of the size of the candles. So very, very useful stuff. And then the FIP levels, also useful on the very long time frames on the actual candle itself. So anyway, that's the pound US dollar. I just want to get your thoughts on that, Michael. How do you play? I know you've got a slightly different strategy with your, you've got 3 legs down. You also wait for a breakout and then 1 leg down, retest, second leg, third leg, and then that's the end of the cycle. And then you wait for a new cycle. So how would you, in terms of like this particular play, where would you look to take profit? Like, do you have a specific, or do you just go for a fixed risk reward ratio, or how do you play that?
Yeah, so that's a good one. And I agree. Like, in essence, I would do that same thing, like that hunch, that kind of topping out at the top a little bit there, looking kind of ugly.
Yeah.
Break that exact zone and that retest. What EMA is this? The 200?
This is the 100.
The 100. Oh, okay. But yeah, so more or less, I would want to see it pull back to like the 50 EMA.
Now it's the 200.
Oh, okay, cool.
What do you want? What do you want? You want the 50?
The 50, yeah, the 50 EMA.
Okay, let's do the 50. All right.
Yeah, so it kind of missed it. So this wouldn't really be, like, I wouldn't be interested in that necessarily for entry. But around this zone where it did retest, right? I can't like draw on the screen, but pretty much how we had that break and then it kind of ran a bit and it pulled back. It kind of missed the 50, but somewhere around that zone.
You mean yeah?
To your left a little bit.
This over here.
To your right, just a little bit.
Yeah.
So somewhere in this zone, yeah. Because if you look to your left, it's retesting that same area that it broke. To the left.
Yeah, because it basically broke over here. Right.
So scooted up a little bit. For me, it would be scooted up just a little bit. Yeah, more or less that area, right? So they got that.
Oh
break.
Man, now you're just splitting hairs, Michael. Come on, man. It was like 5 pips lower than.
No, I think it should be a little few pips down, actually.
Yeah, so I would have wanted.
Let's split the difference. How about that? Okay. No, but I get it. Okay. Yeah. So to me that's all, but it's a very tricky one because of just the size of the wicks.
Yeah.
Compared, and the wick and the body ratio makes it really difficult. It's not very clean. If you look at the beginning of the month, look at this. This is the definition of a clean chart. It's just very, very clear, right? You can see this, like, to identify the previous high when you get a pullback. Okay, so there's a breakout and then the retest. Right, so it's much easier compared to if you look at this just look at the body and wick ratios. It makes it so difficult to do you go for the lowest point here? Does it have to break there and then retest? But it's not really retesting if it just broke out. I get that, but if that's the case, then it's that's what I do anyway. That you go for the body of the candles.
Right.
If there's you just like focus on the actual open and the close. So that's one way of doing it.
A range in there probably. Whenever I have these problems, when there's a bit of ambiguity, I'll just label it, put a little box and just label, or a couple of horizontal lines and just label it as an area, as a zone. Maybe that's how I'd approach it. But I would definitely be trading off the 200 MA here. I mean, if you could just snap the 200 MA back on, just because for me, if there's ambiguity, I mean, for me, that's it. I'm taking profits at the retest right now, or entering a short trade, based on that, because
I'm definitely short on this for sure.
Yeah,
definitely short.
So for me, right, if you was to leave this right how it is now, when this pulled back and touched that area, and you got that red candle that closed below to the far right, I would be riding the position. We'll go up to to like the actual one more candle up.
This one, yeah.
So once that broke that area, because it retested it and now it's breaking back below that area, I would be in right there, right? And my first target would be the actual 200 EMA.
Right. Okay.
Yeah. And if you put the 100 on, that might give you confluence, right?
So yeah, that would be like more or less my move.
Okay. All right. Well, that's the pound US dollar. I'm definitely bearish on the pound US dollar. And if you look at the, sorry guys, one step at a time. This is the dollar index. This is the dollar index, the weekly time frame. Right. So you had this massive drop in the first week of March. Where are you guys now? I'm on a different tab. Okay, you guys are back. You had this massive drop, and then the second week, it like just put on the brakes, and you got this candle, the body closing inside the previous candle's wick. To me, that's always a sign of it's probably going to reverse from this point.
Yeah.
And it did make a little wick, and then now it's engulfing this previous candle's high. So it's going to, I feel, it's going to pull back from this point. And I'm pretty sure that's also at the 61.8 Fibonacci level. Just if you look at just with the naked eye, you guys gonna have to help me. I'm not familiar with. I don't really use TradingView. I'm more motive wave.
Top one.
This one.
Top one.
Oh, that one. Okay.
Yeah.
Okay. So there we go. Yeah. So right on the 60. Oh, okay, stay there. There we go. On the 61.8. You can just see it with the naked eye, right? You can just see that level of the breakout. So I do think we are going to get a pullback, even though I'm still on the longer time frame. I think it's going to move lower, but I think from now we're going to at least a pullback to maybe somewhere in the middle here, or retesting this level there where this little cursor is showing right now.
I think definitely the 0.5, right? I mean, like you said, it's. I think obviously we are, to create a move like that, we are obviously very bearish. But when you see patterns like that, when you just see a dump move, we want something slightly more organic. We want to come down and up and down and up. And when we see something like that, it's a bit nerve-wracking to trade. So if we do get that bounce, like you said, to the 0.5, then we're starting to get a bit of structure we can trade off. So I think that's sound. Yeah.
Yeah. So that's a dollar index, and that ties. I mean, it just like if you look at the dollar index and you can see, okay, well, I'm expecting it to go up, and it agrees with what you're seeing on something like the pound US dollar. Then it just again like stacking those probabilities, right? So I do expect the pound US dollar to go down from this point. Okay, so that's the pound US dollar. Let me just quickly talk a little bit about the NASDAQ, and then, well, first of all, let's start on the daily time frame. Yeah, so we are still in this little range here. I just identified the low before it started to pull back, and then this highest point there, that was 2 days before FOMC. This candle right here, that bullish candle, that was FOMC day, and it basically just touched this previous high, and it failed to break out. It just kind of pulled back and closed inside the previous day's range. So what does that mean? You just straight back into the range, and then the next day you get this inside candle, like a bit of a doji type of candle, which is very bearish. I'm still bearish on this, but we're still in this little range, and I do think we are going to go to this support level. Yeah, I've said that for a few days, but we've been ranging, so we haven't really done much over the last few days. But on the smaller time frames, it's been actually pretty good. I had a pretty good week during the sessions, managed to place trades on most sessions apart from yesterday, but at least I had a recording where I recorded 2 trades, so that was good at least.
Right.
But today is Friday, and I wanted to show you this very good example of a contradiction and the usefulness of this multiple time frame trading. If you look at this 15-minute candle here, you can see the price bounce was right at this resistance area. But if you look at the 1 hour, that's a very strong pivot forming there. Bullish, a bullish candle to the upside. So if you wanted to go short there because it's hitting that resistance level after a breakout, then if you didn't look at what's going on, say on the 1 hour and even the half an hour, you may have been tempted to go short there, but it would have been a bad idea because you're getting contradictions on the other 2 time frames. So that's a good example. But today's Friday. It's typically not a good idea. I don't like to trade maybe the first hour and a half, but after that, no. Fridays is like it's my off day, really, for the NASDAQ. So yeah, but that's but the whole week. I mean, if you look at, I'll show you this trade. This is the trade. I think you were in the session, Michael.
Mm-hmm.
Was it yesterday? And
Yep.
that was basically also, this massive swing, a big person jumping into the swimming pool and just that splash. Is that?
I don't remember seeing that pattern in my trading book.
But okay. So you get yes, the splash pattern. You've heard it here first.
Right. Splash pattern.
Yeah, it was just like, I didn't get anything to the upside. Okay. And the reason for that is, well, this was the open. Yeah, this was the open. And it was just a beautiful move to the upside. I didn't get any entry points because it was just bursting to the upside.
Right. You would have been chasing it, if anything.
Yeah. So it has to kind of play into my hands. It has to come back and retest. And so I can just feel comfortable about where's my risk and so on. It just didn't play in my hands, but on the way back down, it did. So that's where I got my 2 trades. So yeah, but the NASDAQ was this was FOMC breaking the previous day's high, and then kind of struggling, but this is not a good time to trade anyway. I don't trade FOMC at all. And then the next day, we just had this massive sell-up. This is pre-market. So selling off this entire move, and then we got that. It's just a very rangy market, but this is reflective of what you can see on the daily time frame. You also in a range here, so you can expect a very similar patterns on the smaller time frames as well. Right. So yeah, that is the NASDAQ. Michael, do you want to share your screen?
Yeah. So I was looking at same thing for me for yesterday. GU and GJ were, GU was not looking that pretty. GJ, however, was. Just kind of want to point out a few things here. Let me know you guys can see my screen.
Got it. Thank you.
Yeah. Okay, cool. So let's start with GU. I just want to do my my quick analysis on it, right? So for me, kind of how I was mentioning yesterday, once I have this pattern here and it touches the 200, I'm not interested anymore. Like I'm just not. It doesn't really work out too well. So like you mentioned, we got this funny looking up, topping out type of move. Now, even though this was just barely touching it, this is 2 pins. This is enough for me, for them to ping on those orders already, and I'm not interested in this anymore. So once this touched it, that was it. I mean, initially I was looking for it to miss it and pull back and do exactly what it did, which is run to the 200. Profit target would typically be down here, which is the ADR low. Stops above here. Entry would be right below that. Once the candle closed below this 13 EMA. This would have been a nice move. However, for me, it's a bit risky. I don't like it, as I keep mentioning, when it touches the 200 already. I want it to be the first stop to the 200, not the second stop, right?
Yeah.
Because this probability is slightly lower at this point, and I just don't like that, right? So once that happens and it touches this, I'm no longer interested in this at all. So for me, GU is nothing. The next move in my cycle, as you guys already know, right? I'm constantly creating this same pattern, right? For me, once this first one happens, which is right here, that is this move, right? So once that 1350 crosses from here to here, again, I'm looking for it to miss this and pull back to the 50. This really didn't even touch the 50 EMA, which is another reason why you couldn't have taken this. I would have needed to actually price to touch the 50 and then bounce off of it. So 2 reasons why you couldn't take this. 1, it touched the 200 already. And 2, I didn't get a solid interaction off the 50 EMA. So with that being said, these are the same two moves, right? So this is my level 1, right? Level 1, and then the same thing over here, which again, this missed it. So you couldn't have taken this, right? After that, my next move is here, right? And for that to happen, I need my 50 EMA and my 200 EMA to cross, right? And then at this point, I'll be looking for M structures going short, right? Obviously stop here, entries here. TP will be wherever that next lower low would be, right? So how my setup goes when I'm looking at where I am in the cycle, level 2.
So sorry, Michael, when you say the TP will be wherever the next lowest low will be, do you mean a previous low, or how exactly do you mean?
So typically it say, for example, it would be right here because it is ADR right here, but this is just for today. When this does set up, it will be a lower ADR. So it'll probably be somewhere down here. It hasn't painted on the screen just yet. Okay. But I would be looking in essence for this. Oh, whoops.
Oh, okay. So, okay. I see what you mean.
Yeah. So like how this is here now, this will end up being down here somewhere. And I'll be looking to take my profit off of there. Because kind of how you mentioned how you like the ATR, this is the ADR. So in essence, it's their cousins, I'd say. It's the daily range for that particular day. So I'll be looking to make my short once this actually confirms, and then looking to probably exit more or less around the ADR low, which again will be this, but over here once it paints. Okay. So for me, this is pretty much GU is dead all the way for me. I'm not interested at all until again the 5200 cross at this point, and then I get some type of M structure off of that 200 EMA going short, with of course, as I always mentioned, my reload. I want to see this market baseline come back above the static here, and then come back down, right, for the reload. So once I have all of that together, then I'll take it. If not, I'm not interested in GU at all. But just like both of you, I am short GU. My bias is short, right? But it has to, all of this has to line up for me to actually be interested in it. Yeah. So,
okay. Did you find like any Forex pairs that did that did line up for an opportunity?
Yep. So I wanted to just start out with GU, since you went over it. This will be what I'll be looking for next in the cycle, right? So level 1 there, level 2, this will be over here, right? Same exact thing. So I'm just looking for this in this particular cycle. If that plays out, which that will probably not happen today, obviously. So nothing on GU for me today, but on GJ. Now GJ was a bit more interesting, but of course this thing did the same thing, which kind of sucks a little bit. Now mind this pattern, guys. Mind this pattern, like really, like hard, right? You got this same exact thing. You got this pull down. Once again, it's touched to 200, so I'm not as interested in this. First pull back to the 50, and then drop once again, right? Break, retest this area, drop. This is here. This is the same exact thing, right? You got the nice 1350 cross. Obviously, this is coming off the peak high. Again, the only thing that was wrong with this was I don't like them when they touch the 200 EMA first like that. I just don't like that. First stop for me, not the second stop, right? And then additionally on the TDI, which is great too, we have the market baseline going below the static. The TDI lined up and looked great. Reason being is the RSI line and the signal line were above the market baseline on this particular one. Drop. This was actually really nice. The only thing this was missing is, like I said, you can't have this touch this like this.
They're the best. Yesterday, Michael, about me and Igor were talking about these first touches and why it's so for me. We were talking in the context of when I'm looking to say buy the retest of something, which is principally what we're talking about here, I'm looking for the first touch in order to make sure I get the most liquidity. Could you just maybe just explain a little bit why you don't like that first touch?
Yep. So if I was to go, and I'm actually, it's funny you even brought that up, right? So for me, the first touch, this first touch is a cool, let's say 80%, right? This always, for the most part, goes to the 200 afterwards. But the first touch to the first touch to 200 EMA, right, is 80%, right? Now the second touch to the 200 EMA, this is actually dropped down, right? Now we're looking at like 65%. And of course, the third touch to the 200 EMA, right? This is getting even worse. Now we're less than 50%. So for me, my edge, the highest probability setup is the first touch. Of course, it's like, oh, 65% for the second touch. That's still pretty high. Yeah, but that's not as high as 80, obviously, right? And again, this is all about putting the probabilities in our favor. I don't want to be 65 for me is kind of close to 50. I don't want to be playing around with something that's a 65% chance. And I don't mean hit rate. I mean overall of all of this confirming and going my way after it's done this. Yeah. Right? Just like for me, same exact thing is when I have this pattern and I'm looking for this, right? So the first one obviously is the bounce, but when I have this second, this level 2 trade here, right? This is my M off the 200. It's similar to the same, well, M or W off the 200, that is, off the 200 EMA. This is the first M or W off the 200, right? I don't want it to be the second one. Like, right, I can actually probably go through some examples here and point out a second one, right? I don't want it to be, let me see here. I don't want it to be a second, I would have to probably find one here, but I don't want it to be a second M or W off the 200 and I try to take that. I'm only interested in the first one, right? So here's a good example. Once we have the 5,200 cross, as I always say, that's when we're looking for that M off the 200 EMA, right? So this is ugly, but it is some type of M structure here, right? First, this is the first touch, right? First M off 200. Now, if it were a case where, let's say, this came back around, right, and it did this again, and then it tried to go lower, I'm not interested in that one because it's back to the same premise. This second M or second M or structure off the 200 or second touch to it, the probability of it going lower again, I'm not interested in that. Why? Remember, the cycle is, let's go back over here. The cycle is this structure here, right? It's not, it goes down again, right? So we're not banking on it. It's just gonna keep going down here, right? Like I'm not interested in this one. This is non-existent. Once this second one comes into play, I'm not looking for that anymore. I'm looking for the pattern to turn back around and go the other way at this point. I'm not interested in the second touch because once again, we're back to these probabilities here. And obviously, just like you guys probably did the same thing, that took a minute to notice, right? Years to notice that, like, hey, you know what? When the second one occurs like that, it doesn't really go the way it's supposed to, right? Like, we're more or less looking for, once again, let's say when it's this 5,200 cross here, the very first time that price touches the 200 EMA, if you notice, it didn't touch. Once this cross, it didn't touch the 200 EMA at all until here, right? Now this is more or less when this can go, right? But if this was to, let's say happened, and that was the first time, if this was to happen again over here, I'm not interested in this at all. At all. My next move for me would be for this to turn around now. Like right now, I'm looking for the M structures again to go back the other way. Right here and here.
Yeah.
Right. But it's only the first one. I'm only interested in level 1 and level 2. If you try to take this W or M in level 3, that's like a peak. Now you're counter trend and you can get smashed with trying to take this.
Yeah.
Right.
Yeah.
Yeah,
I mean, it's what Jannie, you were saying with that example of like a perfect price action you showed us at the start, where you just up, down, and that's what it looks like. It's one test and away, one test and away. And we're not quite talking about this with this example, but when you have a price action where you go up, down in the same range, then test it again, that creates ambiguity and confusion if you don't trade off. So we're looking for just the basic down, get the liquidity in my market, rather, come in, get the buyers with you and then take off. And the second you start retesting that line multiple times, it's like, what are we trading? I don't know. So this is a really good tip.
You have, because for me at that point, you have you don't really know where you are exactly, right? Because for me, once again, once these two happen, right? These two particular points, what you're in essence doing is, if I'm only interested in these 2 points, right here and here, this third one that you think you're about to take, going a leg lower, is not a leg lower, right? This is you think that this is going to break below this last point, which this one does and this one does. But once you try to take this one isn't breaking below this point. This is about to come back, take you out at break even, or go the other way. You can't counter trend trade this particular move. Like imagine trying to take this long or take this long. That makes no sense. I can tell you wouldn't know where you are in a cycle to take that trade. So the same thing with this one. If you try to take this short, you're on the wrong side, because this isn't about to break this low, right? This trade breaks this low, right? So that's fine. This trade breaks this low. That's fine, right? But this last one, when you try to take this to break this isn't going to break this, right? If it does, it's going to be right next to it. It's going to be a false breakout. It's going to come right back the other way, because this is the cycle. Now it's going to go do the same thing, just the other way around, right? So I stay away from that for the simple fact that, one, knowing where I am in a cycle, the ride is pretty much over. I'm expecting this to go ahead and try to turn around at this point, right? But two, those 2 touches, I mean, that's it. That's it. That's all. You shouldn't be trying to touch it more than that. I'm short here. That's it. Once this comes around, let me see my W formation, and I'll go the other way around, right? And I'm looking for more moves like this now.
Yeah.
Right? Just back the other way.
Yeah.
Yeah. So what would you say is the like, are there like specific market conditions that you struggle and it looks like it's setting up and it just doesn't work, and then you keep getting those failures, and it has something to do with a particular market like conditions, like you in a range on the longer time frames or anything like that, or not really?
So I would say mainly that level 3, like, right? So what could happen is, let's say, we'll have to make this a little bit smaller. What happens sometimes is you don't get that perfect West name. You get something, right? Something like this. And it's like, whoa, when I look at the chart and I try to see where I'm in a cycle and it looks something like this, oh, whoa, I have no idea where I'm at. I gotta let it go. I leave it alone and I wait for it to turn around and just set up clearly.
Okay, so when your cycle comes to an end, you do not look for a new cycle in the same direction of the cycle just ended, that just ended. Is that right? Do you always look for a new cycle in the opposite direction? Okay. Yes.
If I look at it in the same direction, I'm in essence thinking this is going to keep going lower and lower. And for me, That's just not really how it goes. Typically, when you see the moves like this is more an average of what it looks like, right? You got the high, low, 2 days, first day down, second day down. That third one is kind of bottoming out. This is like level 3 for me, and it's pretty much turning around the other way now. I wouldn't try to keep taking this down because I'm expecting the cycle to be over. This is one full cycle. Level 3, right up here. Level 2, right here. I'm sorry, level 1 is there. Level 2 is here. And then we're back at level 3. And it just starts over the exact same thing. I'm looking for this structure every single time. I wouldn't want to trade something going into level 3 to level 4. Because for one, that's not really, I can't say it's not possible. That's not how it works. But gauging that is much harder. Because now it's like your
risk is increasing as well, and probabilities are declining. Yeah,
yeah. It's just like, but in really strong trends. So they say, you know, like pairs like the Aussie yen. I'm not sure if you can remember. There was a very strong trend for.
Oh yeah, I think it was. Yep, it was Aussie yen.
So in that, so it's just a question. So if you get the cycle, you know, it's like the third leg and it's over. And it may pull back, but it's not giving you exactly what you want to trade in the opposite direction. So you may be bang in the middle of the previous 3 legs, if that makes any sense. And then it starts to line up again for, you know, a new cycle in the same direction of the previous one. Would you then consider it? Because you may not necessarily get Okay.
Nope.
So you may. Does that mean you're going to miss out on that?
It does.
Yeah, and that's totally fine with me. I will gladly not take that trade because at the end of the day, as I keep mentioning, I only trade level 1s and level 2s. The example you're explaining is a level 3 trade. I'm staying away from that. That's a peak. Whether it's a peak high or a peak low, I'm staying away from those completely.
I mean, in crypto, we get I mean, so many more legs. It's a different ball game. But the conversation, I suppose, is I see a lot of new traders, they'll just trade one chart consistently and they'll just try and find a trade no matter what's going on. And you need to have discipline ultimately. And if your system, Mike, is great because it stops over trading in its tracks. It means you know exactly what you're looking for, and this is the range where you're in control. And if you there may be for, you know, in crypto, of course, it's different because we get longer legs downwards. But I think if you do try and chase those extra levels, even if you see the signals you need, you're out on a limb. And obviously, when we're trading, we're trying to minimize that. I mean, you do miss this. You miss opportunities, and when you look at it like money is made in the middle, that will change your mindset about how you approach things. You're not going to catch the top. You're not going to catch the bottom because those areas have more risk and less probabilities in your favor. So the middle is where it's at, but it's also a discipline thing, right, Jannie?
Yeah. And just to add to that too, right? Like with that exact approach to it, if you are trying to catch that, at what point will you stop trying to short that or buy it?
Never.
Right, you're end up for me in like level 4, 5, 6 before you finally like stop it, right? And those are just extremely lows or extremely highs. Like when I see something just going up and up and up and up and up, I'm not interested at all until it pulls on down, tops out, breaks that area, and then pulls back and touches it. I'm interested in that part right there. Nothing else. Okay. Even this example here, right? Like how we're drawing now. This one isn't as pretty, but it's the same exact thing, right? As soon as I see this first 1350 cross here, I know I'm in level 1. As soon as I see this 5200 cross here, I know I'm in level 2. I'm only interested in that and that. I don't care if this thing keeps going down. I don't care. I'm only interested when it turns around and does it the other way around. Now I'm interested in this, right? And then I'm interested in that. That's the only thing I care about on the chart. 1 and 2.
Okay. So that was so prior to that cycle, was there a very clear cycle in the opposite direction, or was it
let's scoot over, right? So say for example, right? Do you mean to go long here?
Yeah.
So this isn't clear. This definitely isn't clear, but
see,
I
that
don't
was my
like this.
question.
Yeah.
That was my question. Like if you get a cycle to the downside, that was really my question. Like if you get a clear structure, or your strategy is playing into your hands, if you will, to the downside, and you get a move to the upside, but not necessarily fitting in with your strategy. So you're not necessarily going to trade it up there. And then you get, a second cycle, if you will, that starts in the same direction of the last one. That was the question. I'm not sure if I didn't ask it correctly. But that's what I meant. So if you trade like to the low end and it pulls back, but it's not necessarily trading in that same structure that you would like to see, but it is pulling, it's trading back up. And then you get a new cycle in the same direction of the last cycle. That was what I was asking.
Oh, yeah. I get you. So yeah. So not to get too deep, but yes, there are these things that we call our resets, right? So it might happen in the same like say for example, it might do. I'm gonna scoot this over to kind of draw it a little bit, right? So it might do something like this. No, actually, I need to start at the bottom because we have more room here, right? So it might do something like, right? So let's say we're starting here, right? So to make a move like this, right? And then let's say it does this, right? And then it kind of just like is a short move, basically, like it doesn't really complete the full cycle, right? And then let's say it does this and it ends up doing the same thing again, right? This is kind of more or less, I think, what you're saying. Like you start out as a W going long, and then it kind of like reset and it looked like it's going short, but it started over and then end up going back longer. I mean, going up higher rather. Yeah. So in a situation like this, as long as it resets and everything is the right way still, which is my EMA's crossing, right? Like right here, say for example here, long as the 1350 crosses and the 5200 crosses, if it's still in line and it sets up the right way, absolutely, I will still take it. Because that doesn't, for me, a reset is resetting the levels. That doesn't make it level 3 or 4 or 5. It's just resetting and it's starting over at 3.
So you ignore the first W, the first level 1, you wipe it clean. So it's not like level 1A and level 1B, nothing like that. It's just ignore the first one.
It starts all over. It will start all over. Because obviously the pattern that I draw all the time, it doesn't happen exactly like that, right? It doesn't always make this exact beautiful pattern like this. Sometimes it's funky and it starts over, right? Like say, for example, this is ideal of how you would want it to be, right? But it could also do something like this, right? It could do something like this. Let's say, I don't know, it might do something like this. And then it comes in and does all of this, right? As long as it lines up and it looks good, I will still take it. As long as I can tell where I am, level 1 or level 2. That's all that really matters. How deep or what it looked like to the left, if it was super low or super high, that's totally fine. As long as when it starts to make that actual cycle, I can see clearly where I am. Coming out of a peak low, coming out of a peak high, level 1, level 2. That's what's most important. As long as I can tell where I am.
Yeah, that's right.
Because this thing, obviously, it could just keep going up and up and up and up and kind of mess around and range. That's fine. After you do all of that business, set up the right way. Let me get a clear peak, and I can tell that you're coming off, right? You're coming off of this area here and doing this, or the other way around. As long as I can identify that, I'm fine. I don't care what all the jazz was to the left. Just give me a clear peak that you topped out or bottomed out. You broke, retest for the first time in the same direction. I'm going to take a trade in that trend.
Which is the purpose of your strategy. It's to make sense of the noise, right?
100%, right? there's certain things, right? Let's say I think gold was a good one a minute ago, a good example. Gold's right here. This thing was just making super all-time highs, right? Like, look at this. This is literally going against my exact strategy here, right? Like, this thing is just going. I can't make where I am. This constantly is making new highs. Even back here, you would think that this would bottom out. And what does it do? Nope. It turns right back around and keep going. I'm not interested in none of this. None of it until it starts to behave, basically, which would be this move right here, right? And this is level 2 because the 5,200 has crossed. And I'm looking for this move here. You see, I don't care what happened to the left of this. As long as I can identify my peak and I can see whether it's high or low, I can see my EMAs have crossed to give me a landmark of it, what level I'm in, and see my pattern off of the 50 EMA for level 1 or the 200 EMA for level 2. That's it.
Yeah, tune in next week, folks, for Michael taming more price action for everybody.
taming. Yeah, Michael, the price action tamer.
I'm
yeah, but it's like, but that's the thing about a strategy. You have to any strategy works like that. You have to wait for the market to come to you, and
otherwise
play into
you're
your
chasing
hands.
this, and there's no telling like when this is actually gonna stop doing this, right? Like you can
and that's going to be well, it's going to play into someone else's strategy. Like someone else will go, here it is, finally, here's my setup. You know,
it's like you're looking for edge, but you want edge to be on your side, right? You don't want to be someone else's edge. That's what it's all about.
I've definitely been someone else's edge.
I just want to, sorry, Paul, before you share your screen, I've just got one thing to show you, if you don't mind, on Bitcoin.
No rush.
It will be on the same platform with the 4 different time frames, and I just want to ask you what you think about this. So it's a very interesting. Okay, so I've got the 1 hour, the 2 hour, the 4 hour, and the daily. Okay, so you can see on the daily we broke out there. This candle, was that like a weekend candle? The 3rd of March. Was the 3rd of the March? 3rd of the March? No, that was a Monday. I don't know what happened there, but anyway, there was a breakout with a retest. Look at that beautiful retest, and then a break lower. So we definitely, in my opinion, I think we probably more likely to head lower in the short term. And if you look at how I trade, I want to get at least 2 out of the 3 time frames to line up. So we've got the daily, the last candle bearish, and also the same on the 4 hour. And now on the 1 hour, we had this little breakout with a little pullback. So if it goes and breaks this low, I do think it's going to move lower to potentially at least the support level. Right. So that's how I'm reading
watching. This is Bitcoin for people watching. Yeah, this is Bitcoin.
For the people who's watching, this is Bitcoin. This is Bitcoin. Yeah, this is the Bitcoin. The 1 hour, 2 hour, the 4 hour, and the daily time frame. So it's obviously a bit longer. But that's how I see it. I don't see. I mean, I don't know if people want to buy Bitcoin. This is definitely not the right time. I don't think it's the right time. You can see that you had an attempted breakout over here. And on the 2 hours. So let's just have a look when this was. This was on the 19th of March. Okay, so that was wasn't that FOMC day? Pretty sure that was FOMC day. But anyway, so we got the breakout here on this 2 hour time frame as well as on the 4 hour time frame. So on the 1 hour time frame, if you have to time this, I just want to look at. Okay, this is the FOMC news release, so you're not going to trade it. I don't think it's a good idea to trade. So it's not a good example, but definitely the next day, when you come back to the charts, you can see that it just doesn't break. It just pulled back, and then you get this breakout failure. It's probably more obvious on the 4 hour time frame. And now you're just back into this range, and it also kind of lines up with what you see on the daily. You're below this breakout level after a retest. So I would like to get your thoughts on that, but I am definitely bearish in the shorter term anyway, to at least this level here, the 81 level. What do you think about that? Just basically looking at what I'm showing you here.
Well, I know what my charts are, and I agree with the short-term bias for sure. I think this is why multi-time frame analysis is really important. But Bitcoin, we're talking about, so when we talk about moves with Bitcoin, so firstly we've got to put into context the moves which have been happening, which we'll talk about in a second. But when you have, say, a small move, right, but it's within a range, it's not anything significant, it doesn't do anything significant, that move, it's just moving within a range. But then if you get a small move above a significant resistance zone with also significant moving average like the 200 MA, then even though that move where you just pop its head up above and then comes back down, that bullish signal is there now. If we haven't had that for weeks or months and then we see that, that's the first sign that there is potentially going to be, a reversal in the price action. Obviously, we need more data, and there's definitely, a short-term bias, I think, looking at the charts today. But I think it's about context. So, would you like me to share my chart?
Yeah, sure.
Thanks for yours. That's really, really helpful. Again, really promoting this multi-time frame analysis stuff because it's.
I'm glad we're all on a accord with that, right? Like,
yeah, sure.
Let me just try and. I've got to get the right chart open. Right. So, okay, here we go. Right. Okay. For some reason, it doesn't allow me to just share TradingView as an app, which is really unhelpful. Right. Can you see the chart?
Yeah. Yes.
Right. So carrying on the tradition of this week, having a new Bitcoin chart every day, just to promote the importance of reevaluating the situation and getting a chart which gives you the clear messaging you need. So this was yesterday. And yesterday, of course, this is what we're talking about. We had this. It's not a big move like this, but it's a small move, but it's popped its head above this diagonal trend line, which has been in place for a month, pretty much exactly. And then we had this also moving average, which was surpassed at the same time, plus this ascending triangle. So this is the first bullish signal we've had, and above the point in control on this lower range as well, since, this downtrend really, since we've been at the top, which has been since the start of the year. So this is obviously not, as you said, Jannie, it's not going to the moon, but it's the first signal. And then the rest of the market will just pivot slightly to be a little bit more cautious about their short positions. Sellers will be a bit more cautious, and then some of the buyers will start to get a bit more confident. So obviously we've got lines in the sand, but this is the chart for today. No, it's not. This is the chart for today, which I think supports what you were saying, Jannie, because now we have popped back down below the 200 MA, and we're in this pattern which has a probability bearish bias, and coming back down to this range, or at least down here somewhere, makes sense. And we can look at what other people are thinking. This is just a 2 hour, and there's obviously a bearish bias, and with this pattern, obviously, but the scenarios we can expect to see are potentially, because of that move we had above these significant levels. I think so. Doing this, getting out of the way of this pattern and ranging a bit, and then having another crack is a potential option, because I don't think we're going to have the momentum for any kind of parabolic break to the upside. That's just too much work for Bitcoin to do under the current conditions. But we could see, a tap down here, because there is quite significant support. Just kind of, you see this line here, just there's an edge there, here, and here. So we could see maybe a little, and then a bounce. And then if we do find a footing on the 0.5, then maybe we can get out if there's a bit of confluence with this trend line. But I agree with you, Jannie. I think we're probably going to, come range at the very least, and maybe range. We just got to get this pattern at range a little bit. But certainly, this is not a place to buy. This is the next kind of level you want to be looking at for a short-term trade. But that's the kind of state with Bitcoin. Any disagreements? Any additional thoughts, guys, on that?
Yeah, even if we obviously draw our lines slightly different, but we come to the same conclusion. I always find that interesting, right? But yeah, we are definitely, if you look at the closest support on my chart, if you look at the closest support and the resistance level, this is now specifically on the 2 hour and the 4 hour time frame, not the daily. The daily, you are definitely below a support level. But the 2 and the 4 hour, you are bang in the middle of the nearest support and resistance level.
Yeah, this is the 4 hour, exactly as you said. Yeah.
Yeah. So you like, you're more or less in the middle there. So that's just a very awkward spot. That's a very difficult to stack probabilities when you're in that zone. But I think if you go over to the longer time frames, it definitely shows a little bit more signs of it's likely to first go lower, and then when once it finds support levels on the smaller time frames, then it will be interesting to see how it behaves there. Does it bounce off there? Because that will give you.
There's this line here, right? So we're looking at this chart.
Yeah, I'll tell you the price levels I'm looking at. So it's 81,185. Okay.
Yeah, 81. Yeah. So I mean, if you look at this, you think about a breakdown to this area, and we talk about this support line. If we look at the other chart, I was just on the 4 hour. Where is it? Can't find it. Lost it. Let's just get it back. We've got this.
I'm gonna make a YouTube reel video of you like, oh, where's that chart? Where's that?
Yeah. Promoting my lack of organization. It's just because I've got so many students, so many things. It's just I have to load them up on the fly. And but here's the problem, right? So you look at this chart again, different perspectives. It's not as obvious that we're going to get a lot of downwards movement here because this is pretty, we've had a nice little breakout. So a downwards move potentially, but it's again 82, maybe, there's some support coming in, and this is the negotiation. So you're right. I don't want to say no man's land, but it's this is the signal. This move above this move above the 1 day, and we've popped above the 0.5. That's kind of saying that okay, the tide might be turning, and then we just need to see how it reacts. But the advantage of these patterns are we can trade off them, because if we get a breakdown here, we can move lower. But you have to look at all of the different scenarios and see where the price action is going, because we've got support here again around 82 on this time frame, even though we've come back into the pattern, and again support here. And this is kind of the bearish bias, and we've got the 200 MA on the 4 hour coming in with a pincer move for the daily. So but these signals from Bitcoin, breaking above the 1 day, it's not just about Bitcoin, it's about the rest of the market. And if you look at the money flow, because of that single move by Bitcoin above the 200 MA, this is what's happened to the money flow. As me and Michael, we were talking about yesterday, we've got this lovely move down into this range, and this is essentially the altcoin market growing now. And we've got certain assets like Ethereum, attempting to get back into the pattern, but but it's still a struggle, and that's the issue. We need more from Bitcoin, but with the market the way it is, we kind of just need to wait and see what happens. So yeah, difficult trading conditions for sure. But if you're looking for a long, just short term, let's just get the 4 hour chart. Here you go. There's a buy the retest potential here if it aligns with this. If I just put this horizontal line on. There's a range, again, talking about ranges, but this area got a bit of confluence here. But again, the problem, as you said, like this is now resistance again. So we've got to be careful, but a few things to think about. But what I didn't get a chance to speak about yesterday was the money flow equation and why this move is so significant, even if we get a bit of ranging or lower movement from Bitcoin around. It's the first sign that the trend is starting to turn around. And as we saw with Ethereum, we started now to recover it. Bitcoin has given the market to recover. So I just thought I might talk about for a moment just the money flow and the path to altcoin season. So do you mind if I just show this image?
Yeah, of course.
So I think that this is why, when we're talking about Bitcoin and, not great options for Bitcoin right now. I mean, obviously we're approaching long-term support, but this is why it's significant. So phase one, money flow moves into Bitcoin and causes prices to surge. And as we've looked at with Bitcoin dominance in the past, if I can find the long-term chart, which I'm sure I can't, because without being mocked. You see the money flow is just I need to find that chart to actually make. I think it's here. No, it's not. It's here. Go on. You can take the mic. It's all fine.
No, just enjoying this.
Ridiculous. So yeah. So this is Bitcoin, right? We've been moving upwards. We've had a lot of movement, right? But the altcoin market has not done the same. Case in point, here's this the crypto market cap for the altcoins, and we're just down here. We're we've reset essentially, and the reason being is so Bitcoin's having its day, and it's going to probably continue upwards at some point. But Ethereum and the large caps and the rest of the alts haven't moved. So we start with Bitcoin, and the money moves into Bitcoin, causes prices to surge, which we've seen over the last 18 months. Then, and what we're waiting for, which might be happening in slow motion now, is the money flow then starts moving into Ethereum once Bitcoin gives it permission. But it struggles to keep up with Bitcoin, and Ethereum goes back and forth while Bitcoin starts to outperform it. So no altcoin season. What we're waiting for now is phase 2, where Ethereum, which is representative of the rest of the altcoin market, starts to outperform Bitcoin. So the scenario might be that Bitcoin starts to recover. It starts to bounce here or just hug this line and just put it high, just move around, not necessarily break all-time highs, but make sure it's clear that a breakdown from this level isn't happening anymore. And then Ethereum will then have some room to move, which will then maybe get this downtrend to turn, and then it will move upwards. So that's then phase 2, because Bitcoin is steady, but Ethereum is now putting in more gains. And then we hear people talking about Ethereum is going to be the next king. It's going to replace Bitcoin, the flipping it. Okay. So then the money starts to trickle into large caps like Solana, Cardano, when we see large buy-ups happening, because Ethereum moves, that gives a signal for the rest of the altcoin market to move. People start moving their Bitcoin profits because it's not doing anything. They put it in Ethereum, then they take profits from Ethereum, and then they put it in the large caps. And now we're in phase 3. Ethereum has been outperforming Bitcoin, and some of the top 10, top 100 cryptos are starting to go parabolic. And then, regardless of the market cap, some other altcoins with strong fundamentals are having pumps. That happens all the time. So if you've got like Render token, which is a huge use case, it'll move without this having to happen. But then once the news and the media starts getting hold of this, and Ethereum starts moving, breaking out of like a pattern like this, perhaps, breaking above here, and then everyone's talking about it, and then large caps have gone full vertical. We see blow off tops, mid caps, low caps, micro caps all tend to pump around the same time. And then you've essentially got memes everywhere, Bitcoin mania, crypto mania, and we're going to the moon, and everyone's trying to figure out when to take profits. But we are still here.
Diamond hands.
Right? Yeah, exactly. But this is where we still are. And we didn't see this essentially path to altcoin season take form after the election because of the uncertainty. So this is what we're waiting for, people. We're waiting to see Ethereum make bigger moves, and it's starting to try right now. So that's kind of what I wanted to work through. I mean, any thoughts about that, guys, from your perspective?
Yeah, I mean, that's very useful to know. Obviously, the most tricky bit is now is the execution, right? It's now the execution. It all, at the end of the day, it's still about looking at the charts. It's definitely useful to know that stuff, but now you need to look at the charts and time your entries, and that's not that easy. That's my thought.
Yeah. I think coming from this is one of the most unique things about the crypto market, and this is why I talk about the indices and the money flow all the time, because this is where it's at. Ultimately, if people are coming up to me and saying, "I'm desperate to find that chart. I'm desperate to find it."
Sorry, Paul. While you do that, can I just quickly grab the screen for just less than a minute? I just quickly want to show what's going on here on the pound US dollar. If that's okay.
All right. Just 1 second, my friend. Let me just see if I can finish my thought, and then we can do that. So no, I can't find it. But essentially, the money flow right now is like this, right? It's all going. This is Bitcoin, but this Bitcoin is doing its thing. Nothing else is, and the rest of the market is just sitting pretty, waiting to move. So, and this is of course this is the previous bull run top from total 3, which is the whole altcoin market minus Ethereum. We haven't even come close to breaking through that yet, and waiting for this to happen is ultimately how you time your entries, because whatever the TA is, it doesn't even matter. The Bitcoin will just move the market either way, and things will start to sell off, because we've had plenty of reversal patterns from altcoins after these pumps and dumps kind of thing. But because the money flow isn't working in our favor, we're just, Bitcoin's doing its thing, it's going to the moon, but Ethereum and all the other of the crypto market just doesn't get time in the sun. So you start seeing these patterns, of course, and then you're ready to kind of buy the breakout of a double bottom or a inverse head and shoulders, but they just resets because we're not getting these profits moving in to other categories. So it is really, really fundamental. It's not obviously to ignore the charts, but it's really, really fundamental. And because we've got some really big stuff happening with Ola Prime and crypto over the next few weeks, there's going to be a lot of conversations about this, because the question is going to be, when are we going to have the altcoins going to the moon and making loads of money? And this, knowing what phase we're in, again, like Michael, like you said, knowing where we are gives us the edge ultimately. But yeah, that's me. Thanks for
that's good. I think that's a great endpoint, right? It's kind of like giving a lot of fundamentals, and that's like the catalyst, right? The main catalyst, and it's up to us as traders to spot that on the chart and exploit that opportunity. So really, really good stuff.
Yeah, for sure. I fully agree with that, guys. Just quickly on the pound US dollar. I know I'm supposed to be talking about the NASDAQ, but the NASDAQ, I'm done for this week for the NASDAQ. And I said what I wanted to say about the NASDAQ. So yeah, it's the pound US dollar.
And then after that, Will can go to, I want to pull up my Bitcoin, like the chart, and kind of point out what I see.
Yeah, so this is basically the move we've had since we've identified this trade. I just wanted to, again, the 38.2 would be a very good take profit area. The 50 would be great, but the 38.2, again, it's just the probability is obviously much higher for it to hit 38.2 compared to the 50. So you can take some profits here if you're that type of trader who scale in and have more than one position. I would take probably most off of the 38.2 and let the a little bit to run to see if it goes to the 50. The 61.8 is a very strong support level. That would probably be a level to look to buy and not necessarily to take profit at. But so that's the first thing. And the second thing is, like, if you look at the the one indicator I have at the bottom here, I speak about the ATR on Forex a lot, and you can use that, as I've said, you can to determine like what's not the profit potential, but the potential of the candle's range, because the 14 ATR tells you obviously what's the size and pips per candle on average over the last 14 candles. So that's very useful for the monthly time frame. So you can expect what kind of range can you expect for the month, and where are you currently sitting compared to what you could expect. And that, if you see a setup, and that's exactly what I said to Igor as well when he identified this as a long opportunity. And I just pointed out that on the monthly time frame, if you count these two together, that's going to give you 450 or odd, 450-ish, 460, whatever. And if you look at the ATR, it's 460. So it's already moved the potential. So it's not a good idea to look for a long opportunity to go way past that. Like, if you want to stack probabilities, it's already counting in your, against you. And if you combine that with what you see on the 1 hour time frame, sorry about I'm a little bit under the weather. So that's why I'm not really like 100% on form today, in case you didn't pick it up. But so that's the one way you can use ATR. The second way you can use ATR is I plot two ATR. So I've got the 2 and the 14, and I use that as a momentum indicator, the ATR. So the 14 again gives you the average over the last 14 candles, and then the 2 is obviously what's happening in the short term. So if you are looking to short this position, and we've identified this neckline over here, or wherever you want to draw that line, and you want to go short. One way to really so this is the breakout. Now you get the retest. What I would do is I would look at the 2 and the 14. So if the 2 is below the 14, what does that suggest? What does that tell you? It tells you that the average size in pips per candle is much lower than what the 14 suggests. So that means it's a slow market. You can see it in the size of the candles as well. Does that make sense? So when is the best time to trade? When do you have to wait for this neckline to break? Not necessarily. You can wait for the 2 to cross above the 14, and then that tells you that so the 2 is now actually higher. The candle, or the size of the candles is now higher than what the 14 suggests. So that means that's a momentum shift. So the ATR is a very versatile tool. You can use it for multiple things. So you can use it for momentum and also what you can typically expect the range to be. Very, very, very useful indicator. So if you look, and it also can help you to look on longer time frames to keep you out of very slow moving markets. So I mean, this is just a 1 hour time frame, but this is a very good example right here. You see this little just very long, weak kind of rangy markets, and the 2 is below the 14. Probably not a good time to trade. But once the 2 starts to move away from the 14, then you know that there's a momentum shift now. There's a momentum shift. The average size of the candles are now getting bigger. So there's a momentum. So in Forex, there's not. We spoke about this. I can't remember with who in one of the sessions. Is you don't have volume. And someone mentioned about but you can get a volume on futures, Forex futures. The only problem I personally have with that is it's not accurate. And the reason for that is because the Forex market is a $7.5 trillion a day market. It's just massive. The Forex futures market is about $100 to $150 billion a day market. It's like 1 or 2% of the total volume. So it's not, I'm not saying it's not, but I would be very interesting to see if you get a big move in Forex, does that reflect in the futures market? Does that make sense? I just like volume for me in Forex is for me personally, I'm not saying it doesn't work at all, but it's just a waste of time. You will have better, can I use the word luck? Yeah, let's go with luck. You'll have better luck focusing on momentum, like momentum-based kind of indicators. Like it's just, okay, now it's moving. Now it starts to move, and you have a bias because you looked at multiple time frames and you kind of have an idea of what to expect. Then this 2 and the 14 ATR is very, very useful, right? So I wonder if I can see. Does that make sense? By the way, if you don't, if you don't agree,
For
then
sure.
just where.
I had the same conversation, literally, believe it or not, today with one of my traders. She was mentioning how she watched the interview and they was talking about how they were looking at volume. I was like, we don't really look at that too much because, I mean, you can put an indicator on your chart, but I don't think that's truly representative of what's actually happening. Like, you're better off checking out price action, the size of the candles, order flow, and kind of taking it that way. But maybe if you were trading options or stocks or something like that, then maybe, that's probably when you want to lean on volume a bit more. But for like what we do, I mean, I don't look at volume at all, like not at all.
Yeah, it's not. Neither do I. I used to mess around with that. It's like, this doesn't make sense. And then I finally figured out that how they calculate it is by how many times the price changes within a specific time frame, and then that's the volume, and that's obviously not volume. But I just want to show you, like, there's also a really good example of see that you get that breakout and then the consolidation. And then you've got the support level, okay, because that's where the pullback was. And then you may wait for a breakout, but you can also use the ATR. Sorry, guys, the ATR. So this is where the lowest. You'll identify this point because it's moving away from the lowest point. So you'll identify that as the lowest point. It comes and touches it again, and then from there you can see the 2 ATR crosses above the 14 about You see, so it's just that, again, like talking about stacking probabilities, it's, this is a very, very useful tool. Definitely in Forex, it's a very useful tool to use as momentum. It's like, when's that momentum shift coming up? And you can catch it towards the bottom end as well, not necessarily waiting for the breakout, because you can see this breakout area, just look below here. It's already so far away from the 14. So it kind of started already over here. Yeah, it's already starting to there's a momentum shift much sooner. So you don't need volume for that. You can just look at the size of the actual candles, the average size of the candles. So that can give you a pretty good indication or early indication. This is the same thing over here, right? There you get the breakout, and then from there the candle starts to get smaller, and the ATR, the 2, just drops straight below. You know it's much slower than what the 14 suggests, and you can just wait for that momentum shift, and that's when the 2 crosses above the 14.
That's actually really good. That's really good.
Yes, Some people just get confused. I think when the 2 crosses above the 14, you buy. No, that's not what it means. It just means it's because the momentum shift can also be in a downtrend. The momentum shift can also be in a downtrend. So it's just a little extra confirmation tool. I love the ATR. Like as I said, like what you can expect on average and momentum and so on. But you can, if you do a little bit of, you can just scroll back on your chart. But you need a bias, of course. You need to do all the other things as well. You need to have a strategy and all that. And this is just like it's just another tool that can help you to confirm, things like your entry, specifically your entry.
Right.
When
it's like those indicators that they have on TradingView, where it's like when the green pops up, you buy it. When the red pops up, you sell it. That's it. That's all you got to do.
Like there's no printing issues with that.
Yeah, exactly. So anyway, I just wanted to share that because it is a really useful tool, especially. I think on the dollar yen. Let's have a look at the dollar yen. Yeah. What's that? The monthly time frame. Was it the daily that we looked at yesterday? Yeah, I think it was the. Okay, looks like it wasn't the dollar yen. I don't know which one it was.
I'm sorry, are we not organized over there, Jannie?
All right. This is your time, Paul. Make the most of it. All right. So if you look at okay, so let me just have a look at the monthly time frame on the dollar yen. If you look at how much this has moved, 475 pips odd, okay, 475. What is the ATR? Well, the 2, and then you've got the 14. The 2 is 604. The 14 is 762. And is that right? Is that 700? Yeah, 762. And that's moved 470. So there's plenty of room for this to move. But the 2 is below the 14. That suggests that the candles are getting smaller. So you need to focus on the lower one. You're going to focus on the 604, and then that gives you a rough idea of what you can, expect in the size of the move. Just a rough idea. I just don't like to trade if it's already maxed out. Like I would rather look for maybe a pullback first. If I'm still bullish, I would rather wait for a pullback first before I trade in that same direction.
Yeah.
And
Michael, you got anything? And then I can have the last 5 minutes maybe with everyone's.
Yeah. Let me pull up my charts for the Bitcoin really quick. Just want to kind of, both of you touched on it. I just want to kind of run through it and bring up what I see on mine, right? So I think we talked about this. We were saying that it's actually just now getting to the point where this thing could start making some upward momentum, right? And I say that. Okay, that was with you. Gotcha. So when we're looking at this, right? So this is a longer time frame, right, on a 4-hour chart. So I do want to zoom out a bit, not to actively trade it on the 4, but just to get a better understanding, right? So all the way back here on the TDI, what I'm looking at, right here is where this market baseline in yellow and cross below the static 50, right? So right here, this date was all the way back in, what's this? January 31st. Well, let's do this one. February 2nd, right? So nearly more than 2 months ago. Let me get this off here. So on this day, February the 2nd is when this first dropped down. Now, if you look at this, you look at the market baseline is staying below the static. Here, it kind of peeped up and touched it a little bit, right? But if you get a closer look, you can see that this is actually still below it. It never went above. So this doesn't really count. Where is this thing at? Come on. Oh, okay. scoot that back down. All right, and then you see it's down. Same thing here. This doesn't count, right? This does not count because it has not gone above it. But as soon as you get here, right, which is right here, so literally in the last few days, right, we're just now getting the market baseline to go back above the 50. So this is the first time since February 2nd, right, that price is actually starting to really creep back up. Now, in the forward time frame, I always mention this 800 EMA. This is kind of like a huge support area, like it's known to bounce off of this. So we do got to be like slightly careful with this. But zooming down to the 1 hour chart, this is starting to look good, right? And I say that because there's a lot going on here for me to actually take this setup. If I can get this off of here. Okay, great. Right. So as I always mentioned, in the process, right? As soon as the 50-200 crosses, I'm looking for W's off the 200, right?
Yeah.
So if you can kind of start to see this formation happening actually, right? So we got this leg down, leg up, leg down. Now we're just kind of sitting here, right? The next thing will be for this to go ahead and pop up above this area. And I would love to see this close somewhere above here. Obviously stocks will go, below here. And this is more or less when it's like, all right, we got the first sign, which is here. We got the 50-200 cross back to the upside. Finally, it's been a super long time, right? We have the market baseline slightly going down to make the reload. Now, as I always mentioned too, in the W's and M's off the 200 on the chart, I also need my TDI to agree. So you see how the market baseline is screaming down. I want this to continue to go down, but eventually it'll come on up and curve back up this way and give me my reload. Once this starts to happen and we get this close above, my bias on Bitcoin is officially long at this point. Like I trade Bitcoin, but only buying it. If it sets up perfectly on the short side, I won't take it. I'm scared to short Bitcoin. Right? I just won't take it. Not on the longer time frame. Like
the time to short is probably past, and I think this is what we were talking about. Context is everything, right? Because if you just look at a singular move, it's you're not quite. But I'll talk about this in a second. But I'm glad you've the dates you've mentioned are exactly what I was about to say as well. And we're not. I think there's still a tussle, and like with your approach, we're not at a point where you haven't had your criteria fulfilled yet, right? So it's still not a trade yet.
No, it's still not there just yet. Not there yet, but it's sure starting to go ahead and pan on now, right? Like I want this to at least pop up here somewhere, right? And close above all this little structure here. And like I mentioned on my TDI also, I need this. You can see that the market baseline has just now gone below the static to start giving me that reload, right? Because they got to make one last move. Well, maybe not one, but the last move for me to see would be the reload. Because again, below this price, this static 50 here, there's pending orders going short. So once they go below here, ping on all the orders short. Now it's almost time for them to snatch it away with that nasty move as they always do, right? And then also here I got this. I can tell this is my outside structure as well, creating that first one. Because if you look here, I can see this RSI line is sticking out of the Bollinger Band here. So this has created this outside structure already, right? My next move with the C. So we got outside the band, inside the band. The market baseline is going below the static for the reload, right? Next thing, all we need is this close above. My stocks will be below here. And this is obviously a shorter term move because I'm trading this on a 1 hour time frame. But this would be a decent setup to start going long if this criteria was to happen, right? I'll be interested in starting to finally take longs on Bitcoin at this point. And it's funny for me because when I do actually take trades on Bitcoin, I hit on them. Like this is a pretty solid setup. It's very high probability trade and market for me, like for my data. But for the longest, I haven't been able to take any trades on it because it's been short, right? So it's finally rolling back over to go back up to the upside at this point, as I said, right? We got a lot of confluences here that this thing's about to finally start turning around.
Yeah, and you know, there's room, as we were looking at the TA earlier. There's room for a little bit of a retest of some of these patterns we've just broken out of, and there's still a few tussles to be won. But it's the power of certain signals, which is, I mean, I concur completely. But it's really good to see your analysis, as Jannie was saying, your analysis to match up with mine, just coming at it from different perspectives. And that's the whole trick. Get multiple perspectives.
Yep.
Yeah.
And did you guys see this is the same stuff that I draw up every day, right? Like this is just forming out in this market at this point. So I say right at like 85K, right? Somewhere around there, 85K, all over it, right? Maybe a little bit shorter, but definitely 85K. Nice, solid, you know, strong momentum going up, closes above all of this previous structure here. Yeah, I will be in this. This is probably going to end up playing out next week, so it'll be interesting to see that.
Yeah, yeah, for sure.
Do you think that? Sorry, Paul. Do you think that? Do you think that this entry could be the start of a much longer play, or do you think it's more?
Yes.
Yeah, absolutely.
Yeah, for sure. Now, I'm not saying I will hold on to it all the way from 85K up to 100K, right? But definitely, you know, trailing some stops, you know, maybe holding a little bit longer than I typically would. Because, again, I'm traditionally a day trader, but if there was ever something that I would swing, it would be Bitcoin for sure.
I mean, yeah, because this is where we are. We were talking about this yesterday, right? Now, this is the, you know, there's still a little bit of room to come down, but we've got a couple of charts, longer term time frames, which have either got a diagonal or this parabolic curve acting as support. So we've got a bit of movement down to maybe 70, but anything below this, and we're going to get some pretty serious bearish signals. So, you know, this is the premise for the reversal. And Bitcoin, you know, when you've got a lot of people trying to buy in an asset like this, if we're in a bullish context, you can't necessarily expect it to do a hard retest of these precise levels, which it could. I mean, you know, it's this essentially. Here's support. We're not far off, but that's why there's caution in the market. But this essentially, you know, is the first bullish signal we've had since January, and that's significant. You know, because this is January, you know, January up here, you said February, and this is the deal. So even though we haven't quite, you know, made it out, it is very significant. And then when we see those signals, then people start to enter because they think the bottom is this. So essentially, Bitcoin is working inside this rising wedge and it's fighting with the 1 day. So the bearish scenario is, of course, you know, a break lower to test support, which we establish is probably in this area, maybe not right at the bottom. And the bullish scenario right now is we break back above, and if we get above this level here, we might have a strong move like this, because it tends to go parabolic when you break against probabilities out of a pattern. And then this is also the equation if you're watching the market right now, and you know, if this is Bitcoin dominance, and if Bitcoin comes down a little bit now, we probably will have a breakout here, and it won't be good altcoin trading. So if Bitcoin breaks down, the money flow probably won't work in altcoins' favor. But if Bitcoin does give us something, maybe retakes the 200 MA and sits up this range here, then we might see a move down here from Bitcoin dominance, and that could be a weekend or next week of pretty good altcoin trading, which might see Ethereum find its feet. So yeah, I agree, Michael. I think that's kind of where we are. Really good analysis. Thank you for that. It's very helpful. And I found the chart. Here it is.
Sweet.
I did have it. It was in a suitcase somewhere. I've just pulled it out. So this is what we're waiting for, right? When this breaks, this 2-year uptrend where Bitcoin's getting all the proportion of the capital, when this breaks, this is the bull run. And that's why the money flow, this is so integral to any strategy when you're trading crypto. So it's going to be an interesting few days, I think.
For sure.
Yeah, I mean, I think there's also a possibility that it can come down to 71.
Yeah, no, yeah, you're right.
Do.
No, you're right.
And it's just because of the weekly time frame. I suppose you can even look at the monthly time frame. I'll just quickly show you what I mean by that. I just get so many. I'm very conflicted. I don't know you guys. So 2 out of 3. So I think you guys will win this one. But, you know, I just want to get 2 out of my 3 charts to agree as well, and then that's good enough for me. So, but see on no, I know. But on Bitcoin, you see, like if I because let me just tell you what I see. Yeah, and obviously I'm not into Bitcoin. Like, you know, as deep as you. I don't go as deep as you do, Paul. Not even close. But I just look at the chart here and I see this this rally, and then I get this. You get this pullback, and then the second. So there's a bull flag, and then came to an end. I do not like this dome kind of shape. And if I just look at the Fibonacci levels here, now you may get a little pullback here, but I do think it's going to pull back lower to maybe this to this high there.
Very possible.
Or even the 61.8. So you could get that rally. I mean, Michael, your trade, you guys can be right. This is the thing. Like I'm struggling to stack the probabilities. What's more likely to happen over the other, and I kind of balance out. You know, I just think like there's more downside at the 61.8.
Yeah, I mean, we're not predicting, of course. We're looking at, you know, as you said, it's a negotiation, and I think it is definitely not a clear 3-3 people agreeing, because there's ambiguity still. We've got more moves to see, and that's definitely the level to watch for sure. But with a lot of institutional money and a lot of people looking to get in after a little bit of a winter with Bitcoin, you know, is it going to come down all the way? Because there's just going to be so much money coming in, and we're seeing public institutions buying it up. And so that's the premise. But you're quite right, because that's the ideal entry, right where you've said, and that'll be perfect. But is it going to give it to us? I don't know.
Right. To go from 100K to 70K, and people who've been trying to buy in, man, they're like, thank God this thing came back.
Yeah, that's true. But the thing is, like, I don't know. Like that's typically what happens around the 50% Fibonacci level. Like if that's one of your levels, I know there are so many different levels you can draw, but it looks like it's going to bounce up, and then you just get that sharp reversal. And I think that's actually what happened on the pound US dollar. I think it was.
To be honest, I think both of those, obviously long or short, both of those are solid predictions, right? Like we can totally see what Paul and I just mentioned as far as it finally finding his feet and finally finna go long, and also yours. If there was to say, can you justify where else it could bounce off? Absolutely. It would be exactly where you drew this line at. That would be the next point.
But on the way down, when you get a reversal pattern or we recover a key level like the 200 MA, then that's what gets people to pile in. But we're definitely, Jannie, we're definitely on track for your suggestion until we otherwise, because we're still back under the 200 MA and we haven't really broken the primary trend yet. We haven't really put in a big higher high right above. So right now the TA is still saying what you're saying, but we have the first, like you're saying, Michael, like we've got the first signal, the first glance across the bar, right? We're now waiting to see if we get the second, right? That's the game.
Right.
Yeah. Okay. Well, guys, it's always great to see you. That's it. It's Friday. Have a great weekend. I hope
you guys have fun. I'm sure we'll see you next week.
It'll be very interesting to see you. All right, guys. Have a great weekend.
All right,
Speak soon.
Take care.
All right. Cheers. Bye-bye.
Hey. Hey, Sam. Can't hear you at the moment. I cannot hear you. I can see you, but I can't hear you. Can you hear me? Yeah. Okay. So good evening, everybody. Good morning, good evening, wherever you are in the world. Interesting week in the markets. Lots of ups and lots of downs. Lots of opportunities for everybody. I'm mainly focused on currencies. So without further ado, I'm just going to go into our friend Euro Dollar and show you what I'm the trade that I've got pending, looking to get into. So let me just share my screen. Okay, so what I've been watching is Euro Dollar, obviously still very bullish on the long term, medium term, long term. This is a daily candlestick chart. This week, the last few days, we've been heading back down. That's as a result of the upside breakout, which really failed at the previous high. So we had this kind of push through the previous high, but there was no momentum on the push through the high, and then as a result, we've seen a couple of days, maybe 2.5 days of shaking out some of these weak longs. Now, I think it's a very similar pattern to what we saw prior to the big upside break here. These are obviously daily candles. A similar kind of thing where the market had been trending higher. We had a bit of a sideways chop and then a push through to new highs, but again, no momentum on the breakout. So we had this kind of situation where we've got the bulls, the buyers who are buying the breakout, they become trapped as the market breaks through the highs. And as a result, we got a shakeout again over looks like 3 days here. So I'm looking at the same kind of setup there. We've come back down to the pivot point I was looking for, which again is the equivalent pivot point to what we saw on the last time it did that trap. So traps the buyers, traps the sellers. That sounds like a bit of volume on your side, Sam.
Yeah, unfortunately, this microphone for some reason is not working. It worked every time, so I believe I'm using the laptop mic now. So my quality is going to be a little bit not as good as usual. So I do apologize for that, but at least you can hear me.
Yeah, absolutely. Yeah, we're just talking about the traps that we've seen on Eurodollar on the daily chart, and I think what we're doing is a very similar pattern to what we saw going back to late February, where we trapped the buyers on the upside break, and then we got the flush out, and then we trapped the sellers, and that's when the real move began. And I think we are in the early stages of doing the same kind of setup there. So yeah, today we've kind of just nibbled through the support line. No real follow through as of yet, and it looks like it's going to be struggling. So today maybe we'll probably get the reversal probably going into Monday, but I've got a buy stop in there just to get me in should we get some late turnaround that no one's expecting. But yeah, long term up, very short term down, but again, looking for quite important bullish turn that'll get me a good couple of days to the upside, which is really what I'm looking for. Zooming in onto the short term stuff. I have the pullback as everyone knows that I follow the waves, Elliott wave. I have an ABC correction, 3-wave move from this previous high. So 3 waves down, 3 waves up, and then this should be the 5 waves down to complete the whole pattern. So we're literally, in my opinion, in the very, very late stages of this decline. I've got a buy stop actually at 108.40 on this one. Should we get back above 108.40, then I think that will trap these sellers over the last hour or two, and that will be, at least a very early stages. It may not be the ultimate bottom, but it'll be a good, high probability trade, in my opinion, because again, we've got people trapped below the earlier swing low, and once we get up here, then these people here that are selling the break, they will be covering their short positions. So it's really a kind of anticipatory buy stop order to get me in. Once we get back above here, if we get back above here, then I want to be long, at least looking for a test of this pivot here, and then once we can get through there, then away we go. That's really what I'm looking for. Interesting. I guess the trade of the day, which I didn't do, that would have been selling into that pivot this morning. So in fact, I had a buy stop a little bit higher than that because I wanted to give it a bit more room on the upside, which proved to be the right idea. It broke through it again marginally, but it didn't really, didn't close above it. It didn't break it on any by any real, any real amount. So flat for the whole day, but just waiting for the opportunity to buy into it, looking for a big move higher in euro dollar. So that's euro dollar. Dollar yen, I was going to look at today. So dollar yen on the daily chart, we had an outside session day before yesterday, a bearish outside session here, then a small session yesterday, and then today we're having another crack at the highs on the daily chart. And it looks like a little bit of rejection and a bit of an upper shadow starting to form there. And again, I'm bearish on this one, but as with euro dollar, I really want to see some negative action on the downside on the short term charts. And at the moment, it doesn't appear that the sellers are really stepping in aggressively. So again, this could be one for Monday. Should we kind of struggle here, then Monday maybe we start to break down and form a kind of a double top, or whatever you want to call it, a lower high, and then we start to break down in the bear market. So yeah, just literally just waiting to sell dollars once I get a bit more confirmation in terms of price.
Very nice.
Onto the shorter term chart. So yeah, we had the quite sharp breakdown from above the psychological 150. That was post FOMC. We were watching that at the time, weren't we?
Yes.
Where we had we had the initial move lower in the dollar, and dollar yen was more aggressive than euro dollar going higher. Obviously, euro dollar went higher, but it got reversed subsequently, whereas dollar yen continued down and just went sideways. And now today we're starting with the dollar strength that we're seeing today. Dollar yen has gone up a little bit, but we're seeing a lot of chop action here. So again, I think once we can get back through this point, that would be a great point, a great kind of reversal level for me. If we can get back through the earlier low here, then that would say yes, swing correction and then chop and then start to trend down. But again, don't want to touch it at the moment until I see a bit more bearish action, because it could just break through. We don't want to be selling into it and on the wrong side. There is an argument for selling it up around here, anticipating a lower top, but I don't really want to take that trade at the moment. I'd rather see some action topping out. So yeah, that's essentially where I see those two dollar majors. Dollar Canada, I also have a similar kind of trade on dollar Canada, whereby we've been stuck in a bit of a range. I believe we are kind of in reversing the previous bull market. So major top there, swing down, correction, and then we're kind of chopping and gravitating towards this lower point. So maybe a descending triangle if you wanted to draw your trend lines, and it's almost a flat bottom, I suppose, on this one. Looking at the recent action, again, we're starting to see some long upper shadows on the daily candles, which is a little bit indicative of certainly hesitation on the buy side, and maybe just maybe the early stages of this thing topping out and starting to see a lot more red on the way down. So again, so again, I've got on the shorter term charts, again looking for a bit of a breakdown on the hourly chart. This is then that would give me a kind of an initial impetus to have a crack at the short side. But I think really until you get down to 43.25 or so, it still seems to be a little bit stable, a bit too stable at the moment. So yeah, so that's essentially what I'm seeing on the currencies. Any thoughts on your side, Sam, on that stuff?
Yeah, I mean, the one you just showed, sorry, it was dollar CAD, I think it was.
Canadian.
Yeah. I can definitely see just from the daily graph how price is being squeezed into a tiny little, it was like a flag pattern, right? And so I can imagine there'll be quite a big move coming soon. Probably obviously not today, but maybe next week. I could definitely see something happen, especially, well, it could be it's waiting for the GDP numbers. I think we've got the GDP next week, don't we? In the fundamentals.
Yeah, usually back end of the month, isn't it? It's usually late. It's one of the last figures in. So that could be an impetus. That's
it. Yeah, Thursday final GDP is a quarterly release as well. So quite a big news day that would be. So maybe early next week, we might see a bit of a slow market, but I can imagine everything will open up after that quite a bit. So there could be definitely something big happening with the dollar CAD.
Yeah, I like the kind of consolidation where volatility just dries up, and it's everyone they lose interest, they move on to something else, and before you know it, you get this big move out of nowhere. So it's good to be ready for it.
The calm before the storm, right?
Yeah, absolutely.
Yeah, and I can see that happening with the dollar CAD. So yeah, interesting stuff. Definitely one to keep an eye on in the following week, I think.
Yeah. So yeah, on your side, how's your stock markets doing?
Not bad. I actually took a trade, just closed it probably about 40 minutes ago. Really nice trade. I managed to record it, so I can show the recording. I think that would probably be easiest and go through the recording. But yeah, it was a beautiful trade. It started off a bit on the cautious side, I would say. I wasn't that comfortable, but at one point, if we just get that up on my screen, at the stage. All right. So if I just hide that. Right. So S&P 500, obviously. When isn't it the S&P 500? I'm just going to fast forward because I just started recording the screen as we got to an area of interest, but I didn't actually, it took me a while to actually jump in. So still, let me just fast forward. Okay, there we go. All right, so I got in quite aggressively on this trade. Right, so I got in the moment I started seeing, there you go, entered one position there. So the moment I started seeing, let me just get a little pen tool out. These heavy buyers coming in. Now I was bullish pretty much the whole day. I had a bullish sentiment. If I actually show the chart, might make it a bit more easier to see what I was seeing. If I just get rid of that, watch through. Still getting used to this graphics tablet. So was this boxed area here is where I took the trade. So literally I got in, captured all this. My trade, the whole trade looked like pretty much. I can't remember. I think it was around here I got in. That was pretty much the trade, and the stop was like there. So it was a really nice trade. Actually, I got out a little bit before my take profit because it started messing around a few pips but below it, and I just got a bit nervous and decided to get out. Although it's good enough.
Yeah,
but that was pretty much the trade. And again, I mean, look, we had market open, and this time, like on most days, it likes to move. As soon as the market opens, we get a clear direction. I wouldn't say a clear direction, but it starts moving. But today we had like a really harsh push down pre-market, which is a bit out of the ordinary. I mean, it can move in the pre-market, but then it will generally be like loads of smaller candles, and it's just kind of like a, you know, quite a subtle move down, right?
Yeah.
But today we actually had like power candles. I mean, especially this one in the pre-market, which is very, very unique, very odd. And essentially that kind of made me a bit suspicious because it wasn't volume driven, so to speak. So I kind of felt like it was a longer misdirection, if that makes any sense. Trying to make people believe we're going down. I knew we're not really going to be breaking this area. I mean, we can do. I mean, it's possible, but there's a really nice gap in volume here, which is
a lot of support down there, isn't there?
Yeah, quite a strong one. Although we never touched it, we got very close. And buyers, I mean, on the depth of market, the sellers were aggressive, really aggressive, but they weren't making any progress. So you can really see it in the video on the depth of market. I mean, throughout the whole time, like we're seeing bigger numbers on the depth of market on the sell side, 176, 124. So there was a bit of caution from the buyers naturally. So it took them a while to kind of break through the sellers, but I jumped in. There was still a bit of caution, had a bit of drawdown, but nothing too major. But I could see I started adding more positions as I could tell that every time we broke through one of, like, the sellers just weren't actually doing much. It's hard to explain, but as it was going live, you would see these bigger numbers on the sell side, on the limit orders, right? And they would just poof, vanish. As soon as we got there, they just vanish. So my thinking was it was a lot of spoofing going on. And spoofing is basically when an institution, or it doesn't have to be an institution, but people out there place a lot of pending orders on a particular level. And then before the market gets to it, they just cancel it. And it's usually done by bots. Yep. But it's to try and manipulate the market. It's try to make it look like there's going to be a lot of, like in this case, a lot of resistance when there's actually no follow through. So you get that kind of hesitation from buyers because naturally you don't want to buy into large amount of, you know, limit orders if you're spotting them on the depth of market. That's it's going to make you a bit hesitant. But I witnessed beforehand, before I actually started recording all this area here, there was a lot of spoofing going on. A lot of the sellers would place massive orders, but they would always cancel them. So I kind of had this bias that we're going up. Based on that, I was pretty confident that as long as enough aggression comes in from the buy side, we should be fine. So it took a while. It took maybe 5-10 minutes before the aggression came in, but we could start seeing the bigger numbers coming in again. Slowly the buyers are getting a bit more confident now, which was good. I added another position, and I don't know if I took my full risk tolerance of 4 positions. I don't think I did, but it took a while. It was moving. I started getting a bit nervous as we started moving down. I was a little bit like, is it really going to hold? And my overall stops were here, but I would have happily got out if we broke these 940, because this is institutional activity. Sorry, I didn't even mention that. I didn't even point that out. But the fact that we have 2 identical orders, 940, basically, on the delta. I know it's not orders, so to speak. It's the delta, but on 2 price levels, to me, it spoke, this is institutional. And it was in an area where I already had boxed out. I was already quite confident that this is going to be support. It kind of lined up, and I had a very good feeling about it. So I stayed in. If it did break below there, then naturally I would have got out before it hit my stop loss. But something very interesting happened then. I'll fast forward, here it is. Out of nowhere, did you see that little jump up, right? Just out of nowhere, any second now, boom. There was a huge just leap forward, and all of a sudden these buy orders appeared. That's when I got very confident and knew, okay, we're going up now. Because it happened, it was instant. Okay, so, and it wasn't from the depth of market. I didn't see the orders, like at least that amount of orders get executed, you know, on the depth of market. So it wasn't like pending orders that it just jumped into and therefore, you know, bounced off. It was a market order by something, a huge institution, right? Placing a huge amount of money. It all kind of lined up. That's when I started getting a bit more confident. I said, okay, this is going to be a good trade. And this is why I held it pretty much to my take profit, this one. So fast forward.
So a lot of support in your favor there.
Yeah. Exactly. And then I was pretty happy as long as we break above this box here. This box that I had. But we broke past it before, so I wasn't too worried about that being such a, you know, heavy resistance area. And I could start seeing that the numbers now on the sell side were slowly starting to just drop off. Didn't really see any big numbers anymore in the depth of market. The spoofing kind of finished, and we just very easily, we still saw a bit of bigger numbers coming in on the sell side. We still got 180 here, 100. But every time we get to them, you'll just see them drop away very quickly. They disappear. There we go. It's really hard to spot, but because it happens so quick. But you'll see the number will stay big on the sell side. It will stay big, but then it will just disappear. It wouldn't actually get executed when it got to it. So it was pure just spoofing happening, which is technically illegal. You know, naughty,
I was going to say, is that
out there?
Yeah.
It is. It's market manipulation. Yeah. So whoever's doing that, you know, shame on you. You should stop. But we all know it happens. I mean, we all know it happens. It's just part of the thing. But so there was spoofing going on, and that just kind of, and I mean, look, someone's really trying to spoof the market here. I mean, and I can understand why a lot of buyers would be hesitant. Because if you just look at the buy side compared to the sell side real quick on the depth of market, this looks normal. The buy side just looks normal. This is very average, right? But just look at, you know, 126, 92, 107, 104, 123, 133, all pretty much over 100 on every level except for these two. You know, that is quite scary buying into that. So naturally, there is that kind of hesitation from the buyers, but I think most people figured out it was generally spoofing. I mean, I'm sure some of them did get executed, obviously. Some of them are real. They're not all fake, but the moment, you know, you kind of pass that area, it just flooded up very nicely. Pretty much. Yeah. I mean, it never went back down. It just kept going pretty much. And I was happy to hold it pretty much to my take profit. And you could just see the buyers coming in, you know, I mean, clear as day. Again, 1,000, another 1,000, 700 there. Like there's no sellers in the market. There really isn't. So I'm very happy to stay to my take profit. It kept going. And I did get out just before. Just because it kind of refused to, it got very close and it was just refusing to get there to my take profit. It did eventually do it about 25, 30 minutes after I got out. So generally speaking, it doesn't really matter too much.
Yeah, but you got in a very good level anyway, so it wasn't as if you know.
Yeah, I mean that would have been
just
an
take it.
extra little bit. Like it really isn't that big of a deal. And you can see that was my take profit. It did actually move down for a bit, for a good 15 minutes, and then eventually it broke through. But when you're that close and you're seeing that hesitation get in, I mean, you might as well just get out. I mean, if it's that close, right? Like, I don't know if that's good or bad advice, to be honest, because it depends on your strategy. Obviously, if you're going to be really adamant that it has to hit your take profit, fair enough. But yeah, so I was very happy about trade. All in all, yeah, it went very. I wouldn't say completely smoothly, because there was that spoofing going on.
Yeah.
But I'm happy that the buyers saw through it, most of them. I think the entry was very clear. Not the entry, sorry, but around the entry where we just saw those buyers come in with such aggression. That gave me enough confidence where I could kind of relax. Because I was on the edge of, I might have to get out. This might not work. But then the moment that happened, whew, that was a lot of relief on my end, where I could relax now and know we're going to be all right. Yeah.
Yeah. No such thing as a totally comfortable trade, is there?
No, this is it, and that's why you know, especially with the way I trade, like I have to have my finger near the exit just in case, because I don't want it to hit my stop loss. Because a lot of the time you can tell when your stop is about to get hit, and you might as well save those few pips, like especially when you're looking at the contract. And just to point out, I mean, I'm already out the market, but on the 5,700 level, pretty much where my take profit was, look at those orders, 306 there. So I think a lot of other buyers also, what do you call it, had a similar take profit level in mind.
Yeah, round number.
Yeah, nice round number. It's also a gap in volumes before. That's why I had this box drawn out. So everything lined up quite in favor that actually the trade, like even my target was, other people were on the same wavelength with me. And it's nice to know when you see evidence that other people also have the same kind of idea as you. It gives you a bit more confidence in that trade. So yeah, all in all, that was I was a very happy, best trade of the week for me. And it happened on a Friday, just for the weekend. So I'm very happy with that.
Set you up for the weekend.
Yeah, exactly. I was very pleased. But that's pretty much it on my end.
Cool. I just see Andre's asking for sterling dollar analysis. I can have a quick crack at that. If let me present. Okay, so a similar kind of idea, obviously, to euro dollar. They tend to do similar-ish things, give or take. So again, a kind of a weak push to new highs. Psychological number 130. So a little bit of hesitancy there a couple of days ago, and then the shakeout last 2 days, back down to some support. We've got some big support down here at 29.10. And again, 28.61 there. So we're coming into that kind of support zone. Again, a little bit similar to the euro dollar example for me, where we've been in a nice healthy uptrend, but every so often it does get a little bit ahead of itself. And then we have a couple of days down back to, to come back down to a previous support level in the previous uptrend. So it's just a, sort of a short-term trap for the buyers. Then we get the sell-off trap for the sellers, and then we get the resumption. So yeah, I'm looking for I'd say almost imminent turn in sterling dollar, but obviously it's late Friday, so maybe we start to get the turn Monday once the weekend has been and gone, and then we get a new some new impetus going into next week. So yeah, yes, it's very, very similar to euro dollar, healthy uptrend, but corrective pullback, and just looking for an excuse to buy it, really. On the short-term charts, obviously since failing just a little bit above 130, the sell-off We had the quadruple bottom we were looking at the other day.
Oh yeah,
right there. So big support which it broke through. This time around it really did kind of settle below it, and then it was struggling on the upside, and then a couple of waves down with kind of breaking down. So this is kind of indicative of short-term weakness, obviously. So I'm looking for some kind of clear signs that the sellers have exhausted themselves, and that will give me the early entry into what I think will take us up to new highs for this market. A little bit early at the moment, I would say, in terms of jumping in for me. We're still below broken support. In fact, we're kind of retesting it now. So again, there could be an argument for selling into this bounce, looking for another push down. But for me, I want to see this thing. Well, I think we'll eventually see this thing start to head higher, maybe stabilize going into Asia on Sunday, Monday, and then maybe we start to continue higher again. So short term, the bears have it for the time being, but I think we're very close to a bullish turn, because we are in a bull market and it looks like a typical corrective pullback against the trend. So I guess I'm kind of on hold on this one, waiting to buy into it once we get some clear signs that the sellers have really exhausted themselves. Any thoughts?
Interesting.
Sam, on this thing?
Yeah, I mean, I can have a look with
major top or corrective pullback. Yeah, go for it. Yeah, I think you nailed the top the other day. On the futures.
Yeah, I'll have to look at the volume to get a good feel. I'll share my screen.
Yeah, it might be interesting to see. Yeah, maybe we see some panic selling here.
Who knows? Let's have a look. Stage. All right. Which one do you want to do? Pound, yeah?
Yeah.
All right. So, oh wow, yeah, really has dropped. Damn, what happened at was there news that came out for the pound? What
I think
there?
just literally they went through this. Yeah, Euro was holding above. They were both holding above their support levels for most of the day, and then we just got a technical break through them. I don't think it was any. I didn't see anything major come through, but yes.
I mean, that looks like a news
nice
candle, but I could have sworn I didn't see anything on the actual calendar.
Maybe I missed it.
All right, let's have a look at the volume. Who knows? All right, let's zoom in. See what we see.
Some big numbers down there.
Oh yeah, of course. Oh yeah, lots of trapping going on. Okay.
Yeah.
Now that makes a lot more sense. I think this is just seeing that. I would be looking at bullish right away.
Yeah.
They're not letting.
That's a big number, isn't it?
Yeah.
Yeah.
And then even 600, that's big for the pound as well.
Yeah.
And it looks like they're still potentially trapped. Yeah.
Yeah. No, equivalent.
Yeah. So someone is sweating in the market. Yeah. Whenever you
is it similar to? I was going to say, is it similar to the Euro one at the top that you picked out, where you had that big buy at the very? Yeah.
Someone put too much money on the line, and they're going to trap them. That's definitely I think from this area here. I mean, this is they're not letting these people out. No. So I would be surprised if it even gets back to the low. If it does retrace, I'll be surprised if it actually gets back to the low and then continues. I think it's going to stay above there. For how long? Who knows? Until they get out, I'm assuming. Until I mean, where would you even put your stop if that was you? I'm assuming up here, right?
Yeah. If you're a short term player, then
Yeah,
yeah, you don't really want to see it. Yeah,
it's quite a big stop. It could be a longer term position. I would say it's probably, especially if it's on a Friday.
Yeah.
So yeah, they'll probably have a position similar to, I don't know, probably, I don't know where they will target without looking more in depth, but yeah. So I think we're on a stop hunt. I think there will be a stop hunt coming.
Yeah.
Where they're gonna go back to these highs and take out the stops. So that's what I would think would happen.
Yeah.
Now whether it will continue going up after that,
yep,
we'll have to know. We'll have to look at that time, but that would be my bias. In terms of it's a hard one because there is a nice gap in volume there, which would work as, in this case, resistance. And there's another one there for the day.
Yeah, it seems to be stopping the bounce so far.
Yeah, but again, I mean, yeah, it has kind of stopped, but it doesn't necessarily mean it could slow it down, but it could easily blow right through, and then do that kind of. And then the next area would be there where I'd imagine would be resistance. And you just about see it's been touched in the past. Oh, earlier today, I think. Yeah, earlier today. It kind of dipped into it and then reacted heavily to it. So I wouldn't be surprised. Yeah, if I was to go bullish, obviously I wouldn't go bullish now because of the time and it's the weekend. But if I was to enter, I mean, most likely we're going to see a bit of consolidation. Obviously, it's the weekend, so nothing's going to happen. And then Monday, maybe we might open around here again. And then we'll probably break through that area, come back, retest it from this side, come up until here. And then from there, we might see a push down again. Because this is just a trap. I mean, it doesn't have to, it doesn't necessarily mean it will be an uptrend for the next week.
Yeah.
It's, that would be my prediction. But again, and then maybe go down from there.
Yeah, interesting. Okay. No, similar thing on the euro dollar maybe, or euro FX future.
Have a look. 6E euro. Oh, it almost looks identical, the chart, doesn't it?
Yeah, a real kind of breaker, technical break.
Okay, so on the euro, we didn't really see that trapping going on. So someone on the pound got a bit too, I mean, a little bit, but 600 contracts there, but nothing on the same level as the pound.
No.
But we actually had buying come on. So, I mean, I'm assuming that would have been, I wonder why buyers stepped in there. I mean, right, so there was a gap, actually literally a gap at some point back in March. So now it's filled that gap. So I'm assuming there were buy limit orders placed here for when the gap gets filled, they'll think that it'll go up, right? So the markets eventually come back, fill the gap. So here was the beginning of the gap to the end. So it's a huge gap, actually, assuming over a weekend, right? It's just filled it. And I'm assuming there were limit orders there for when it does get filled for it to continue up. That's my guess, but I might be completely wrong with it.
Yeah.
But it's just the only thing that I can see kind of lines up to as to why there was buying happening, quite heavy buying happening at that bottom of that candle.
Yeah. Okay. Interesting stuff. See if it stabilizes and see what it does.
Yeah, exactly. Yeah, there was quite a bit of volume that came in. I mean, it's actually not that huge, the volume, to be fair. I mean, I'm seeing similar amounts. No. So
yeah, it's not massively aggressive.
No, it's pretty much in line. Like, I mean, that's 600 there, they're bigger, but I would imagine someone, I would imagine that's that person exiting.
Yeah.
It probably went down quite a bit. I mean, again, the footprint chart is very deceiving on how much it actually moves. So if we just measure that, yeah, that's 23 pips already. So if whoever got in there, they were in profit 23 pips. So that's quite a substantial amount, right? Considering how little the time. So they would have put their stops maybe near break even again, and as it came back up, they basically got stopped out. That's what my assumption is. Or I mean, these could be sellers taking profit. I mean, if you sold at the top here, you know, you're up 50 pips. I think you're going to take money out the market. So this, yeah, I think a lot of these people would be actually sellers taking profit as well. I mean, there was definitely that random 97. It's definitely some sellers getting out the market, taking profit for whatever reason. They saw that as an area, because it's very odd just to have a random, you know, bit of buying going on in the middle of that candle. So that to me would indicate that was, you know, people taking profit. And if it lines up to anything obvious, if I just highlight that area, go back to the candles, not hollow candles, is there anything that kind of makes sense? Not really, to be honest. So I'm not, it might have just been people exiting manually, who knows. Yeah, it doesn't really line up to anything in particular. So I don't know. I mean, sometimes you can't figure out people's thinking, trying to piece together the story. Sometimes it's a bit hard, but other times it's clear as day. You can see exactly what people are doing.
Quite a large volume candle there, yeah, on the sell-off.
Oh yeah,
quite a high.
Yeah,
quite a high.
It was very, very high. I mean, yeah, very high for the euro. Absolutely, yeah. I mean, this is huge. It's the biggest volume candle of the day. So, yeah, absolutely. There was quite a bit of heavy volume there as well. I'd be interested in, oops, not that, to actually see what the total volume was. So 15,000, yeah, almost 16,000. So it's got very heavy volume, yeah. Oh, well, interesting. I mean, the pound one definitely a lot more interesting to look at, because it's
yeah,
you can see someone getting trapped. The euro, a bit harder to figure out what exactly is going on. So I'd be a bit more hesitant. But considering the pound, I see something quite clear, and they generally mimic each other quite well. I would have a similar outlook on the pound. I mean, sorry, on the euro. But I can't see any reason why it would.
Yeah. So maybe you get back above that blue line there that you've got. That could be a squeeze point.
Yeah.
Yeah, these are the point of control on today. On today's one.
Yeah. I just wanted to mark out. The only thing I noticed is this massive gap. So
yeah.
Well, this wasn't even from a weekend. It went from Thursday to Friday. Gapped up.
Bit weird.
That's very odd. What the hell happened that day?
It's not
the 13th of March. Bring any memories back?
Not so much. Unlucky for some.
I mean, not the rolling. I mean, correct me if I'm wrong, but that is very rare to have a gap like that on a weekday, right?
It's not the contract roll, is it? Going from one to the next.
It could be, but no. Wait a minute. I'd have to Google the exact. But it usually happens. I'd have to Google it, see if it lines up. But that, I mean, either way, it's a huge gap. You could be right, actually. It could just be the contract expiring. Yeah. But it's a huge gap. And because of that, I know a lot of traders like to always wait for the market to fill the gap. And then once it does, it always comes back to fill a gap, right?
Oh, yeah.
So I can imagine they'll be buying then. Other people would have spotted that and would be happy to start buying around here now that it's filled to push the market up again. That's the only, I don't know, logic I can kind of make from it all. And as for the point of controls you mentioned, let's have a look. Turn it back on.
Yeah.
The point of control is nice in the middle.
Back above there. Yeah, that could be a trigger.
Yeah. I mean, there'll definitely be some pushback around the point of control. We're going to go sideways for a bit the moment it gets to the point of control. That's natural. But the fact that it's dead in the middle as well of the day, that's usually it's kind of like see it as like if you saw a doji on candlestick patterns, you know, where it's kind of neutral. It's kind of, oh, we don't really know. Like there was no one really won. The beginning of the day, it looks like, you know, the buyers won for a bit, and then the sellers kind of took over, and we're kind of going back. It's very neutral, a point of control in the middle. I mean, naturally, you're going to have a lot of the time, you're going to see a point of control more at the bottom, even if it was a down day, but that's just because of the consolidation, right? But if you were to ignore this area where it started consolidating for the rest of the day, so ignore the value area and just look for where was the heavy volume, you can see how it goes, you know, the sellers pushing it down. But yeah, quite a neutral day in a weird way. So who knows what will happen on Monday, but
yeah,
let's go back to that pound, because that was quite interesting. It's always nice when you see something as clear as that, like someone getting trapped and the market reverses. And yeah, it would, we're actually breaking through that area quite easily now. Kind of stopped a little bit, we're starting to break through. So we might even see this pattern occurring today. We might actually see this play out because it's definitely going to react to the point of control.
Yeah. And that they get a bit too nervous, then suddenly they're covering, and then before you know it, you've got a late rally.
Yeah, exactly. And we've got the point of control right here, so we're definitely going to see, you know, the market's going to stop around here for a bit. Can potentially see a bit of a pushback and then a continuation until eventually it breaks through the point of control. So yeah, we're getting a bit of a late move here. Yeah. That's fun too.
Yeah, I think these these shorts, they know that there's a weekend coming up. Are you concerned if you're short? You know.
Yeah. I think if I was short in this market, I would be very concerned. I would get the hell out if I was shorting this. If I got in here somewhere, I would definitely be getting out. Yeah. I would have got out a long time ago. The moment this person got trapped and they started moving against them, I would have got out a long time ago. Because that's always a telltale sign when you're seeing, you know, someone's placing 1,470 contracts and another 600 here, and it's not pushing down. That's concerning, you know. That's very concerning. That's someone absorbing you from the other side, taking all your orders, and yeah, it's going to need it. If it can't push down with that volume, it's unlikely you're going to get more people putting in extra thousands of contracts. So it's very unlikely it's going to start pushing down. So that's always a very nice setup.
Yeah, I'm just getting my short dollar CAD. What's your Canadian dollar futures looking like? Are they bullish?
I'll actually have to know what the symbol is.
I see. It should be CD. Should be CD.
Is it?
The future is CD. So Canadian. Yeah, I guess Canadian.
Maybe because every Canadian dollar. Yeah. Oh, okay, okay. Oh, wait a minute. No, that was a different. That was completely different. What kind of exchange? That was a Brazilian exchange. No. That can't be right. Canadian. No, it's Brazilian. CME. Yeah, there we go. CME.
That's right. Yeah.
6C. That's it. Cool. Right. Let's have a look. Just look at the daily real quick. So we've got that area. That would be interesting. But the resistance might come up here.
Starting to break.
And the previous days, yeah, we kind of held on that. Okay. The only immediate resistance I see is we're approaching that now, but I think it will hold. I mean, not hold. I can't imagine it holding. I just need to get a feel for the numbers again. What's big and what's small. I'll say 200 seems to be a bit on the bigger side. I'm not seeing anything really bigger than 200 generally. Yeah, this is even smaller than the pound and euro. So 200 would be considered. Oh, yeah, that's quite a lot. And oh, 300. Okay, so we had some heavy selling come in here. I'm trying to make heads and tails of it. Confused as to.
Yeah, some big selling on the way down.
Yeah, I mean, how many pips are we talking here? 20 pips, yeah. I'm trying to figure it out, the story of where these sellers went, what happened to them. Because we're seeing random buying, like equivalent buying pretty much. I mean, this is almost identical, right? But I'm trying to figure out what the hell happened there. I would have to see how the candle played out. Was it first buying coming in and then it went down and then those buyers got out? It could be that. How that candle actually formed in time would give us more clues. So you'd have to drop on the lower time frame and see actually what happened. But not really seeing anyone trapped. I'm pretty sure these numbers are a lot of these people getting out. And then we didn't really got a bit more aggressive buying coming in. Let's just delete that. Again, more selling trying to come in around this area, which would make sense. They're trying to defend that area. That makes sense. Tried to push it down, and then buying came in quite heavy here. Here's the heavy buying coming in. Yeah. So the real move. So these were sellers exiting, kind of drifted a bit. Sellers tried to come in again, and then the heavy buying really came in here.
Yeah, on the the lower, the higher low kind of
started pushing up. Yeah, exactly. People were waiting for that pullback, and then and then didn't really have that much trouble. A lot of sellers getting trapped on the bottom, which is always a good indicator that we're probably going to go up. And we're getting to that resistance area now, so it should be interesting to see what happens. Did that ever get tested? It's hard to see when that was created. Yeah, so in terms of my bias, it's actually a very difficult one. I'm a bit on the fence with it. Half of me is saying that we might get a bit of a pushback from this area, but then there was some pretty heavy buying, but it is also coming up to the weekend. So are these buyers really going to stay in the market that long? Are they probably looking to get out soon? If we start seeing bigger sell numbers come in, then I'm going to guess that a lot of these buyers getting out, and then the market kind of resets, and then we'll just go sideways as it becomes neutral. We'll see a consolidating market, and then eventually, when the market opens again next week, I mean, God knows what could happen. So yeah, I'm a bit on the fence with hard to say. I have no real major bias with it at the moment. I don't see anything in particular to give me confidence in either direction. But if it had to be like really short term, if I had to pick a choice right now, like really short term, I would want to sell here, maybe back down to that area here, to the point of control. Yeah. If I had to pick something, but I personally wouldn't take that trade. That would be on the border.
Enough.
Yeah. It's just not enough there for me. But
okay.
That would be literally getting
Andre's
in just based on support and resistance. Oh yeah.
Yeah.
Andre.
Dollar index DXY. Do you have
DXY? I So just the dollar index. Let's have a look. I know on Forex it's DXY. I don't know if the futures have. Oh yeah, there we go. DX. But it's a different exchange. I'm not sure if I'm subscribed to it.
Nice.
Okay, so I can get the ICES. Okay. If it's part of the CME group, then I just don't know if it's actual. I don't know. It could be tick data. If it's tick data, then it's kind of useless in a weird way. I'd have to Google ICES if they're part of the CME. I'm honestly not sure about the dollar exchange. But I have a look and then see if anything looks right or makes any sense. But I'll be a bit curious about the data. Yeah, I mean, pretty much similar stuff, really. Buying coming in, getting out pretty much at break even again. Sellers coming in near the top, push down a bit. Big numbers would be, I'll say anything 200 would be considered very big here. Which kind of, I don't know. I mean, I really don't know about this data.
Yeah.
0. Let me see if, oops. I don't know. If it's not from the CME group, I won't trust the data. So this could just be tick data. If it's tick data, it's going to be very unreliable. So I wouldn't want to analyze it and without knowing where this data is coming from. ICES, I've never heard of it. ICES.
Let's have a look.
Well, I'll do some research on it at some point. Could you quickly Google ICES? See what
Yeah, I've got
what it is.
I've got the chart on Trading View of DX dollar index. I can. Shall I present screen there?
Yeah, please. If you could, that'd be great. Yeah.
Sure. Okay.
I'll have a quick Google of ICES, what that is.
Okay. Okay. Yeah. So, So what I've got is kind of previously a bull market that's topped out, and we started to trend lower, and this is a bear market bounce, in my opinion. Very. I guess if you turn sterling dollar and euro dollar upside down, you'll get a similar kind of idea. It looks a bit more like cable turned upside down, as opposed to euro dollar. But yeah. To me, you had the big thrust down when people realized that, yep, it's a bear market. Narrower ranges now, just pushing into new lows, no aggression. Now a bit of a shakeout, and then I think once we've squeezed out these late sellers, turn and make a new low. That's really, it ties in, I guess, with what I've got on the other stuff. But I think a new multi-year bear market has begun. So this kind of ended a major swing to the upside in the dollar, and we've topped out, and then we are trending down. So I guess in line with the other stuff, maybe we top out today, maybe we top out Monday, but I'll be looking for some aggressive selling in the very near future.
Yeah.
Let's have a look at the shorter term. Oops. Let's try that.
Do you ever use the DXY, the dollar index, to as kind of like a confluence? If it's, for example, if you're trading like the pound US dollar, you would expect, if you're like shorting it, you'd expect, but on the dollar, it's, I'm getting confused myself now. I'm trying to,
it's basically upside. Yeah, it's upside down. So you'd expect this thing to top out if euro dollar and sterling dollar base out. That's really what what you'd be looking for. And I think the biggest component is the euro of the dollar index. So it should, in theory, look a bit more like euro dollar than it does the others. But sometimes you've got a yen component as well. So, but yeah, so it's had this kind of very choppy, almost begrudging rally. It's not massively aggressive from the low of a couple of days ago, and today pushing through. And there's that kind of climactic looking move that we saw on sterling dollar and euro dollar, but the other way around.
There it is.
Kind of there's the spike, pullback, retest, and now struggling. So it'll be interesting to see whether we get a flush.
Yeah, I think with TradingView you can map two charts on top of each other, can't you?
Yeah, you can.
I wonder if you could.
Yeah, you can just add.
Yeah, you can add it, and then I wonder if you can actually reverse a chart.
Can you flip it round?
So
I'm sure you
yeah.
can. I've not done it, but I'm sure. Let's see. So, for example, a euro dollar like that.
Yeah, look at that.
So
that's amazing. And you can see exactly how inverse they are. That's amazing.
So yeah, I think euro,
really
the euro is the biggest. Yeah, it is the biggest component. In a word, the same kind of view for me as with euro dollar and cable sterling dollar. I'm looking for this thing to top out fairly soon, and then we start to resume the major downtrend.
Yeah. I mean, that almost looks like a work of art, doesn't it? It's mesmerizing.
Yeah.
They have that on the canvas.
They gravitate towards each other, and then they go in different.
Yeah, it's amazing.
Now that would be sad. Yeah, so that's that. 1 second. Let's. Yeah. Anything more in the stock markets coming through? Looks to be quite firm still, holding up.
Yeah, we're kind of just going sideways. I mean, around that kind of resistance area, that was my take profit. We haven't really done much since then. Yeah, we're just going side. We're ranging now. Might break out again, but I highly doubt it. I'm looking at the numbers and I can see all those buyers taking profit clear as day. Everyone's getting the hell out of the market, which makes sense. Yeah, there'll be nothing. I mean, I could share my screen quickly and just point that out for everyone. Let's just do that real quick. At the stage. Yeah, so where was I? So my trade was here and I got out here roughly. Then, all these buyers eventually, you can see them getting out, bigger numbers basically. Some buyers got out, as it started dipping down, they got a bit scared and got out, which is natural. If it starts moving against them, quickly get out, secure your profit. How many times have we all done that?
Yeah.
Some people got really good. They waited. I mean, respect to those people. Got more balls than I do. And yeah, more people getting out. We just had lots of buyers exiting, basically, getting out of their positions, which released a lot of pressure, and the market's just kind of going sideways. So yeah, we're just going to be ranging, basically. That's if you look on the candles.
It's interesting. I was just looking at the daily. Yeah. On the daily candle, I mean, obviously it's not closed yet, but interesting. If it does close here, you've got a nice lower shadow at support on the daily candle. Could be good for next week.
Oh yeah.
Should it stay
look
here?
At that. Yeah.
So that might be.
My overall long term as well is now more bullish for the S&P 500.
Yeah.
I mean, look how on the daily it just looks really messy. Because when I add all my drawings, it just looks you can't even see the candles. But oh look, there was a gap right there. Who knew? But yeah, my overall, I wouldn't say long term, because long term would indicate, you know, we're talking like weeks and months, because I truly have no idea where it will be in a week or a month's time. I couldn't predict that. But I mean, like for the next few days would be more on the bullish side than bearish, just because this area here where we stopped at was, I wonder if I can still draw a volume profile on it. Oh, I can. Perfect. Was the last little gap of volume, and we stopped beautifully, and we really rejected it hard. Like we rejected that area hard. So generally speaking, we've been blowing through a lot of areas now. It's kind of been quite strong. There has been a lot of sellers trying to push it down, still thinking, you know, this is going to hold up. But if I do a volume profile on the way down, we've blown through that gap of volume. The next real area where I would be looking at potentially genuine seller, like it could push down again, would be all the way up here. So I'm bullish until we get to around this area. And if we blow through that, then to this area, which is near the point of control. And if we blow through that, then it'll be to this area. And if we blow to that, then we're just going to new highs. So
and it'll be one of those typical, you know, it's funny how everyone gets mega bearish on this stuff, and you know, I don't think any bearish phase has not been reversed since the dawn of time.
Exactly.
So,
so
you get downward trend.
You were saying, sorry.
Yeah, you get down trends and things like that, but you know, 20% down, 30% down, or whatever it might be, but it always comes back. There's some kind of magnetic pull going on of the all-time high.
Oh yeah, I mean the S&P 500. I mean, the amount of people who've got so much money in there long term as well. I know it doesn't get reflected in the futures market, so to speak. You won't see that actually in the orders, but it's such a stable historic kind of asset to trade. Like it's almost a cornerstone of long-term investment, right? You know, put your money in the S&P 500 and get 6% a year. Like it's not going to crash. Like, I mean, it can do. I mean, anything is possible, right? But it's going to take a bit more than, I think this was like 9% or something for it to truly crash, you know? So, and I think Jannie was speaking about like how he uses the ATR to get like a realistic expectation on things. And I'm sure if you did like an ATR right now, like a monthly, checked out the monthly ATR or something, you would realize this is probably the most, like it's moved enough. If you're shorting it down here, you're probably in for a bad ride just because it's already done like most and more of what it is expected to do, you know? It's about time it pushes back up. And it's blown through all these areas. You know, this was a big gap in volume. And to be fair to it, it did reject quite well. You know, we pushed down, this gap of volume was created. It pushed up, did reject, came back down again, but then really started shooting up, blew right through. And the next area is really not up until here. So when we do get up to here, I will definitely be shorting the market because we're going to have maybe 2-3 bearish days, or at least where the main movement will be a push down when we get to here. So I'll absolutely be, you know, as a short-term kind of scalper type trader, I'll be looking more, you know, shorting the market when we get there. But there'll be, you know, other support areas around here. Maybe they probably haven't been created yet fully, but where then once we get there, I'll start looking to buy again. And that's pretty much it, you know. Let's have a look at the pound, what's going on. Okay, so we kind of dipped above, and we're still there. We're not ranging yet. I mean, sorry, we are. It looks like we are ranging. So yeah, I think we're going to go sideways.
Nothing aggressive. Yeah,
it looked like it was
nothing
maybe
aggressive
about to.
on the upside, is it, at the moment? It's
Nah. I mean, it had a bit of aggression come in, but they still look like they're very much in the market now. So who knows? Who knows? But again, I mean, it's the time of day.
Yeah, it'll just die into the close now, won't it? It'll just
Yeah. It's going to get weaker and weaker and weaker, and then it's just, and it's Friday as well. I mean, it makes it even worse. But yeah, what else could we look at? If there's any, for any viewers, if there's any particular instrument you would like us to look at, please do leave it in the comments and we'll take a look. We'll absolutely take a look.
Yeah, I was looking at crude oil the other day. That looks to be quite positive too, sort of recovering. As the stock market seems to be. There's big support around 65, I think, on West Texas.
Oh, okay, nice. Do you want to
share my screen?
Show your charts real quick, yeah.
Yeah, I'll. Here we go. Okay. So big support down here. And we've had obviously a down. We're kind of in a bit of a downward trend, and we're seeing a nice recovery. But interesting, we're getting a lot of buying interest around this level. Yesterday was quite a nice strong move higher. It's interesting. That sort of came out of nowhere, and it seems to be holding today as well. So maybe a bit more upward movement on crude from the support level.
Yeah. Oh no, absolutely.
But long term stuck in a range.
Yeah, this is the thing. I mean, markets range sometimes for months on end. They can be very boring, but you just have to switch your expectations. That's really all you have to do. I mean, you might have to change your strategy. It depends if you have like a breakout strategy. Then yeah, if you're ranging. Don't trade a breakout strategy, but generally speaking, just lower your expectations a bit. Just kind of adapt to the market conditions,
Yeah, I think since the Ukraine thing kicked off in 2022, it made a major high, and it's just kind of come all the way back down and just stuck in a range. And you get you think all this geopolitical stuff that's happened in the last couple of years, but it goes up and it doesn't stay up. So it's interesting. Maybe eventually it wants to break down. Once it's had its technical bounce. But I think if I can get the longer term, it looks like a sort of a bearish triangle type thing overall.
You need to take a picture of that chart. And send it to BP and all the petrol companies and be like, why aren't your prices dropped? Why am I still paying the exorbitant? Why am I still paying so much to fill up my car?
Yeah.
Magically, the prices haven't kept up with.
They say up like a rocket and down. Yeah,
exactly.
No, I think they say up like a rocket and down like a feather when it comes to petrol prices.
Exactly that. You're in Switzerland, right?
But yeah, there's the mate. Yeah.
How is that? How are the prices
I think
there?
A little bit cheaper than the UK, but not massively so. I don't think it's taxed quite as heavily. But
to be fair,
it's not. I mean, I'd say most things over here are quite expensive, but petrol is not. By comparison, it's not really expensive compared to. I think so, because the franc is so strong. It has been so strong for quite some time, and you'd imagine that you'd get the benefit because the franc is so strong, and they can buy things cheaper from abroad. But it never seems to work out that way.
Well, you must feel good when you go on holiday, though, just knowing that pretty much your currency just dominates everyone else's.
Yeah, you do get some good a good value when you go abroad for sure.
Yeah, I can imagine.
So crude yeah, a bit of a bounce, I think, from this kind of level, but overall, it looks to be, you know, they're selling, they're making lower highs every time it tries to go up, and I think eventually it's got to crack this this level.
Yeah, that's actually been a very long range, hasn't it?
Yeah, just really, really boring.
When did that start, that range?
Boring, to be fair, from a trading perspective. So that was the war kicking off, and then a double kind of retest, and then all the way back down, and then so this is like 2023. Wow. So that kind of kicked off the inflation of 2022, and yeah, just contained.
I remember when oil dropped to like its lowest ever. I think it was down. Yeah, there it is.
COVID.
Oh yeah, that was and the queues at the petrol station, everyone was filling up, even though it was COVID. People just wanted the bargain. That was great. I remember that. Yeah. That was. I remember hearing a story. There was one guy, a trader, who he was a newbie as well, and he just happened to, you know how like a lot of these like very new traders, they kind of gamble. Let's be honest, right? They just enter loads of positions and, you know, max out their account, right? And this kid, he was very young. He was like 19 or something, and he happened to just enter loads of short positions just as crude oil crashed, right? And he turned like $200 into like $190,000. And it was just wow.
Yeah, and
I mean,
yeah. If I've got the Midas touch, you know, and but sadly, not every trade is going to be the same.
This is it. I hope he didn't try and repeat that over and over and realize that was a complete once in a lifetime fluke.
Yeah, walk away from the casino.
Exactly. But you look, I mean, anything's possible. But he must have been felt on top of the world. If I had something like that on my first, like when I just began trading, I don't know what I would have done. I think actually it might be negative in a weird way, because I would have been so overly confident and thought so highly of my abilities. The Dunning-Kruger effect would have kicked in so hard. I probably would have lost all that money as quick as I made it. That's what I think would have happened.
I think that's probably the worst thing that can happen to you is instant success. It's probably good to have a few failures first, or at least, you know, some success and then some failures, and then learn from the whole thing, and not be carried away by it. Yeah.
We human beings learn through pain, especially in the markets. You know, if you get burnt really hard, that's when you truly learn your lesson. Like, okay, I'll never do that again. But you got to feel the pain. You know, you have to feel the pain. It's part of being a trader. Unfortunately.
Yeah, and I think I guess the clever thing to do is to keep things small while you're doing that. So it's not going to wipe you out. You know, it's just a little bit of bit of pain, and you get over it.
Exactly. Keep things small. Keep things realistic. But yeah, but what a story though. When I saw that story, I was amazed. I truly amazed. Something like that could happen, but kind of shows, you know, anything's possible. But yeah, I mean, I think stuff like that. I mean, I've never had that kind of, you know, when I was brand new, I didn't have that much luck on my side. But there were, you know, a few good wins, and definitely the Dunning-Kruger effect is something all traders need to study. And for anyone watching who doesn't know what it is, it's basically when you're new to something, you overestimate your abilities. Okay, so if you're just starting out on something, or you're relatively new at whatever, it could be anything. It doesn't have to be trading, any profession, it could be a sport, it could be absolutely anything. If you're new to it, you're going to overestimate your abilities massively. And when you're actually a professional, very good at it, you underestimate your ability, because you realize how big and how much there is to learn, and how much you do know. You have a much better gauge of the scope of what you're getting into. And you see it in every human being. It doesn't matter who you are, you fall, in some degree, you fall into the Dunning-Kruger effect. It's happened to everyone. And it's especially prevalent in trading. You get new traders who will overestimate their abilities. And that's why they gamble, ultimately. Yeah.
It's a fine line. It's a fine line, isn't it? You need to be totally on top of your money management and your discipline, all the rest of it.
Yeah, and money management, discipline, risk management, all that comes when you've been burnt too many times. You've been in the market, for many years now, and you know what can happen. You know how anything can happen because you've seen it all. You've seen trades where it got one pip away from your take profit and it didn't execute, or it didn't, you ended up getting out at break even. You've seen everything, right? So you become more risk adverse. So not risk averse, the opposite. You become more what's the word? I can't. It's tip of my tongue at the moment. Never mind. You understand what I mean. You become more sensible with your risk.
Yeah,
cautious. There we
cautious,
go.
realistic.
Yeah. So yeah, Dunning-Kruger effect, definitely something to study, because if you're aware of it and you're honest with yourself, okay, look, maybe I'm overestimating my abilities here. Maybe I am, and you can kind of get back onto a realistic expectation with things. And the moment you have realistic expectations in the market,
but I think also on the other side. Yeah, so on the other side, you don't want to beat yourself up too hard as well when you have a couple of bad days in the office. I think as long as your process is sound, you're going to come through it.
Yeah, exactly. Don't be too hard on yourself. Everyone, I mean, I'm sure you've got some, which would be now funny stories, things you did when you were new to trading, which you look back now and be like, what the hell was I thinking? We all have them. I mean, like one of mine is I had, and this wasn't even when I was that new. This was when I was a few years in, all right? And I was somewhat profitable. I say somewhat because I would be profitable and then lose it all, and then profitable and then lose it all. So getting there, but not quite there, And I had probably the best 2 weeks of my trading career. I mean, I'm pretty sure I didn't lose a single trade, and I was trading a lot, over trading. Every trade I got into just worked really nice. I don't know what happened in those 2 weeks, but I could not lose.
Yep.
And then I remember there was that one trade, and I thought to myself, I've made all this money. I am going to up my lot size by a stupid amount. I pretty much risked, I don't know how much, but I risked a lot. I'm talking maybe 20-30% of my account on one trade.
Yeah.
And that happened to be the trade where the winning streak ended. It wiped out all my profit. Yeah. And I was stuck. I remember I was praying and begging and doing anything. I was like, I just wanted to go back to break even. Just break even is great. And I couldn't go because it hurt so much, from going from such a high to such a low in one position. That pain. And I've never done that mistake ever again. So you have to, you learn from that pain. That was my kind of where I was like, no more. I am sticking to the rules.
Yeah, it's just been out of control, isn't it? I mean, the markets obviously do what they want to do, but you can control most other things, and particularly your risk. But when you've lost control of that, it's a horrible feeling. So never again.
Never again. And I feel like you have to go through something like that. I mean, you might not. I mean, everyone's different. Some people are just very good at being disciplined by nature, and that's great, honestly. But for me, I had to go through that pain, and it wasn't even so much losing the money. I think it was the realization that I wasn't unstoppable. Like the hope almost like vanished, you know, and you went from such a high to such a low in such quick succession that
the bubble burst.
Yeah, it was painful, but it was a necessary thing I had to learn, because if that didn't happen to me, it would have taken me probably many more years before I eventually got that lesson.
Yeah.
So yeah, we will get
good to learn it early, and then and it not cost you too much.
Exactly. But yeah, I mean, I think I lost close to what a nice brand new car would cost, to give you an indication of how quick all that went. And I wiped out, you know, 2 weeks of profit like that. And the only reason I got out is because I couldn't stand the pain of the idea of now losing money of what I originally put in.
Yep.
Just had to get out. And yeah, I mean, although I only lost 2 weeks of trading, so to speak, right? But yeah, I mean, still to this day, that hurts.
You still remember it. Yeah, I think probably one of my worst things I did when I first started way back was floating the stop, moving the stop. That was not never do that. Never move it against you. Never increase your risk. I'll just move it back. It's coming towards my. I'm going to get stopped out. Let's move the stop. Let's take the stop out. No. No, that's never good. That's never good, because they'll find you. They will find you.
Yeah, and that's exactly what I did on that trade. I just kept moving it, hoping it will just reverse at some point.
Yeah,
it just never did. But painful stories, but we all have to go through them. And that what makes us, you know, I mean, without that, I don't think I'd be the trader I am today. 100% not. So if you are going through a bad patch in trading, believe me, if you stick at it and you learn from the mistake, that's obviously the most important part. You'll look back in a few years' time and you'll be like, actually, it was necessary. I understand why I had to go through that bad patch. And yeah, because it does. You learn from pain, you know.
Yeah.
But yeah, we've got a few more minutes. If there's any comments that anyone would like to leave before we this live stream ends, we've only got 3 minutes left. The markets are naturally very dead because it's Friday evening. Everyone's not out, but everyone's, you know, out the market and want to enjoy their weekend. So, but yeah, if you got any comments, please, by all means, leave them in the whichever platform you're viewing this on. If you go ahead, just leave a comment. We will be able to see it on our end. We'll try get it quickly answered, or in the few minutes we have left. But yeah, I think we should do a podcast one day, you know, going over the stories, the worst stories we had, because I feel people can relate to the bad stories, not just the good ones. Like, I mean, there are good stories as well, great times, you know, trades that just were amazing and, you know, really gave you that confidence boost. But the bad times are the ones I think every trader can truly relate to, because we all have the same story. I've never heard of, like, every trader I've ever spoken to, they have the exact same story as I do. Like, we all do the same thing when we were new. We all did the same mistakes, and it's funny. And we all believe that the moment we entered the market was against us instantly, and that as well, which can't obviously be true because, you know, we all had different trades, but it's amazing. Yeah. I think we should definitely do some.
There's lots of internal monologues going on, isn't there? When you're in a trade, you know, there's lots of conversations in your head, you know, trying to get you to do the wrong thing. You know, take the profit now, you know, let it run a bit. Yeah, it'll come back. You got to fight those demons.
Yeah, absolutely. I mean, all the time with me as well. Still to this day, I fight the, like, I guess because the way I trade, like, my strategy is I'm not too fixated on the take profit or stop loss. pretty much always get out before one of the others hit.
Yeah.
So, but then there are times where I'm in a good trade and I get out and it just keeps going and going. I'm like, why didn't I hold that one? You know,
yeah,
but,
I could have kept some of it, you know.
yeah. But again, you know, if it's working for you and it's generally profitable, why change it in that respect? Just, yeah. But that is time. Howard, it's always a pleasure. Hope you have a good weekend. And to all the viewers, thank you all for watching. This is the end of the live session. And we'll be back Monday again with more of these live sessions. So do join us then. I hope you all have a great weekend. And yeah.
Great weekend.
Cheers, guys. Thank you, everyone.